Morning, guys. All right, cool. How's everyone doing this morning? AMD's going to be shorted hard. Why? What time is the Fed stuff happening? 2 p.m. Happy Fed Day. Yeah, you too, man. I can't wait for the spicy sideways. Making fun of people saying that. Oh, I mean, I'd be careful past 2 p.m., but they fucking crushed earnings, so. Yeah, I'm a neutral for AMD at $99. The Fed stuff today. We got the minutes at 2 o'clock. Doesn't mean when GN above GN. Isn't GN normally above DN? Yes. Indicates asymmetry in the options positions. The options pricing at a higher price target than the market. What are they announcing? They're gonna announce their forward rate and like quantitative tightening projections. Yeah, I saw RC's tweet. Still balling on CCs today. Still bailing. Oh, bailing on CCs. Probably. I don't know. 135. Yeah, I probably will. Closer to like the mid-afternoon though. Did we ever get an updated FTD list that was supposed to be posted Monday? Yeah, they re-released it yesterday. With the proper numbers. It's not too impressive. There's a couple spikes on XRT and IWM that were like a little bit over 1 million. But I think the FTDs we're concerned with are in the futures window, which would have been in the second half of March report. That'd be the result of OMMs using options to hedge instead of shares. Possibly. down we go for AMD. You think that's really sustainable on the earnings beat they had? Still holding AMD calls? Yeah. I have leaps. And like far dated calls, so I don't really have any reason to sell at market open. A bunch of them are in the money, but not all of them are. $10 million volume for AMD, is that high? I mean, for the start of the day, yeah, it's pretty high. Fucking hate shorts. Shorting isn't fun. I hate myelin sheaths. CME's doing fine. We're probably not gonna see a lot of price action today until like the mid-afternoon. Jesus, the fucking IV spike. Holy fuck. Did you guys see that? My fucking calls went up like 8% on what, shit, more than that because they were down 6. 14% bump. Fucking market makers are pricing in a move. Robinhood opening short selling to retail. Nice. I can't believe that's something they don't offer as a brokerage already. What's your take on AMD buyback this quarter? Smart move when the stock's dipping. It's a good way to fuck the shorts when you're moving into a recession. Also, share buybacks when your stock is cheap is just positive for long-term shareholders and for the company itself. Shorts short your stock, you go extra long. Move the float, right? Does this mean we're near the bottom? No, but probably close. I still really do think that a sub 100 is not beneficial for them. Entropy's bottomed out almost to the same level it was before our run. Price has been stagnating in this range for a few days now. So we've got some decent volume holding us at these support levels. And they really don't want the buy interest, I don't think, that comes with dropping the price any lower. At least they probably want to keep us here in this 120 range, where interest is a little, like, buy side interest is a little lower in this range. And if they can keep us in this channel for a little while, they can return some shares and get that borrow rate driven down. A borrow rate which they bumped yesterday in order to drive us back down into this range. So it's important to them. I don't know if it's important to them due to the price for like forward swaps. I don't know if it's important to them due to the lack of buy pressure in this range. It could be, but it's a good range for them to crush IV and get shares returned. Because yesterday was interesting, right? Yesterday they had to do something about this, which why, right? Like, I mean, it's not like we were breaking out back into the previous trend. Um, but why spike the borrower rate in order to keep us in this channel? And so that indicates there's some importance to this price range for them. Because otherwise, just keep returning shares. Who gives a shit what the price is? Um, or drop it lower if you really need to return shares and you're trying to like win out. Get out of here, Walford. When you say in the money, it doesn't necessarily mean profitable, right? I mean, usually it does. Maintaining trend crushes entropy. Yeah, that's true. Do they need it lower though? I mean, we're already at like the same level we were last quarter, right, Dork? Like January? Or are we still a little higher than that? Sorry, Greg, I was wrong on AMD PE ratio compared to overall market. They beat earnings and solid forward guidance. They are safe and everyone likely. They fucking killed earnings. That was impressive. AMD dropping like a rock. I mean, it's down $2. The shorts still need to get out, right? Give them a second. Or they slam it, right, and try to get people to sell. What are we playing today? Just losing some money on AMD right now. I'm not playing the SPY until later. Everything's gonna be pretty flat unless you want to sell like intraday strangles. CNBC just reported that Biden is taking AMD private with his AMD buyback better plan. Does Fed raising interest rates affect shorts? Of course. It raises borrow rates. Additionally, it changes the value, the row value of like swap positions, which is super risky. SPY straddle for 2 p.m. Probably, yeah. And yeah, I agree. It's going to move pretty hard in one direction or the other. That news today is more hawkish than priced in. Would money flow into cat or would cat drop to the lower channel? Uh, More hawkish predictions probably aren't great for cat. They have a lot. They have a lot of like operating debt. I mean, they have the cash on hand to pay it, but they do have a fairly decent amount of debt. And so, you know, they use that to kind of suppress the price a little bit. The last time they bumped interest rates, I think Cat took like a $5 hit for a couple days before bouncing back. Although Cat's kind of already on the move today, so and it's at 217 right now and kind of like pushing up. This looks kind of good. I mean, the Dow is going to be a little less affected by the rate hike than, you know, like the S&P will. Or by the Fed news in general. Probably starting to come up. Got the fill. I like how quickly it retested 217.50. The Fed is raising rates. I think we should expect another rate bump. But I think the market's only priced in like another 0.25. What the fuck happened to my pen? Yeah, I think the CDAN Queen, I think the market's only priced in an additional point. So I think if they come out with like a surprise announcement of a higher rate, then you know that'll cause some shock. Remember, it's not really the rate hikes that are affecting price. It's more the uncertainty. Fuck, I should close my cat 210s. Hmm. Nah, fuck it. Let it run. Um Cat carrying Dow or Dow carrying cat? That is the question. It's a good question. Um 0.5 priced in? Is that what the targeting is? Who the fuck said 0.5 hike? Was it Bullard again? What about a 5% hike? I'm in. Buy puts. And AMD's having an interesting morning. What are they targeting like 94? Oh no. Can't see that being that successful. it's boring to watch. It's Jamie. Pretty stable. 120. Visa's having a nice morning. It's probably going to test 113. Where's Stefan for the rounded bottom breakout? What was the purpose of dropping AMD's price over the last few months? And what was it about AMD that allowed them to do that? Like, is AMD more shortable than other stocks? No. It's just as shortable as other stocks. I mean, they're selling due to the decline in the value of tech stocks. There's also, you know, sell-offs in the sector because there's chip shortages, and you know, all of these guys get their fucking chips from TSMC, and it's like there's issues, you know, getting more chips. So a lot of fears that, you know, that chip shortage would affect their earnings. You think they can fix inflation without a recession? If they can keep a recession from happening long enough for supply to outweigh demand. Yeah. Like if they can hold off long enough for like the bullwhip effect to drop prices of consumer goods, which is a naturally deflationary, well, it's a natural deflationary mechanism. So possibly. Not that it can't just spike right back up again, but chip shortage, I can go buy some at the grocery. Wrong kind of chips. CEO bought hundreds of thousands of dollars of stock a few days ago. Positive gross margin, positive operating margin, huge price range for the stock ticker RBBN. Uh, it doesn't look terrible, but I don't know if I'd call the range huge. Options are kind of completely fucking illiquid. Uh, I don't know. Maybe if it sees a shorter term price bump, like a better spring, it'll draw some more interest. Right now, there's no liquidity in the options chain. Definitely no bullish bets. No strong bullish bets. Huge price range further back in time, but that could just be like, the dying breath of an old company, right? I'm not gonna look back like 6 years on their previous range. It's not like they're a commodity or something. The pullback before testing 212-ish. Looks like it. Also, it can just chop in this fucking channel for weeks. This is what happened the last time I had a big position on Visa. I had like a 210 position, and it just chopped between like 206 and 208 for like 2 weeks. Visa's in a way a lot like Cat. Like, you want a lot of time on options. Yeah. Rig's doing pretty good today. EDOC slipping 4%. Little recovery, I think. Apple's up. What are your tolerances for spy straddle? Not to copy, just curious about how you'll play execute. Usually like $1 out of the money on either side. Is it illegal to trade and drive? Probably. Is this the story of a girl who cried a whole river and drowned the whole world? Is it long term? It's both. Jose D. You holding any weekly CCs through the Fed talk this afternoon? I'll probably buy them back like just before. That way, if there's like a big bull rally and it slams CNS for about an hour, I can sell new CCs at the top, or maybe I won't sell any at all. We do have ETF FTDs starting tomorrow, right? Today's Wednesday? Yeah, tomorrow. You see it moving more. Yeah, I think it can. I mean, they're definitely trying to suppress the breakout in price on AMD right now. I mean, look at the fucking insane volume and flood of buy orders. And they really didn't push it under 90 for that long. So there's not going to be too much profit taking for them to take advantage of. July AMD calls too soon to hold. No. I'd be careful buying them before 2 p.m. When do you envision starting to load up then? If we're reaching the point where we should slow on CCs, I might pick up some like shorter dated calls just to see if they run the price for the ETF FTDs. So I might pick up some calls that cover me out through like May 19th, probably June's. Not a lot, just a small position. SST price action? Is it just dead? Yeah, it's just dying more. It's like extra dying. What's the bear case? Supply chain shortages? Oh, it's AMD's been heavily shorted forever. It's supply chain shortages, Intel bulls, a lot of big hedge funds have massive Intel positions. It's gotten better over the years, but back when AMD was trading at like $3, it was just getting shorted by everybody. Did AMD beat Intel? Yeah. Thoughts on CRCT? Double bottom on the daily, weekly. I don't know if a double bottom is. Oil is. This is CRT. CRTC. Or CRCT. Fry cut? Oh, they've been doing pretty well, huh? Well, they were during the pandemic. Guess not anymore. This looks good. Maybe like a $5 move. Give myself like about a month. Pretty low volume, so probably want some time on that. Small float though. I don't think they're going out of business. Their fucking shit is everywhere. All right. I mean, historically, dork stocks really do just go up. Big profits on SPY calls yesterday, AMD today. Nice, man. If we see larger than expected rate hike, would we expect the Dow value stocks to plunge also or go up? I think we'd see more money flow into like higher value companies with lower debt. Oh, check cat. That's still fine. And the struggle to get the price down is real. This isn't GameStop. You're not gonna. Oh, whatever. Thoughts on GLD 175C leaps? Good luck. Theoretically, if we hit a recession, it should be profitable. But if it's a quick crash, probably not great. Thought on Jimmy's descent to 100 starting today or tomorrow? No, I don't agree. I think we'll get locked up in this range for quite a while. Too many FTDs over the next couple days. ETF and FTDs from the March run. Just use Forex. The owning. What are options positions for GME looking like right now? Call interest was picking up yesterday. Put interest was falling off. I think we hit like positive call ratio towards the end of the day yesterday. Our put call ratio is at like 4 point or 0.45 going into this morning. Historically, when AMD runs after earnings, it seems like they short immediately after earnings and then run it after. This is common for a lot of stocks that run into earnings, especially if large short positions are built up in advance. So if you see like a big dip into earnings and then a beat, you usually see like a day of shorting. So like, in the aftermarket, the stock will like run a little, right? And then you'll see shorting for like about a day. And this is them getting out of their short positions usually, and then it'll run. We're waiting for the Fed thing today. If the Fed comes in at expectations, we'll see like a little bit of a bull run, I think. Maybe it's SPY back to 420. Are they getting out of short positions by shorting more? They need to push the stock back down to a price where they can get out of their shorts. Or a price where they can hedge them and carry them forward. Do you think the market has 25 BPS priced in, not 50? I think the market has like 2.25 priced in. But I think if the Fed comes out more hawkish, I mean, it's just the expectation, right? The Fed could announce a 1% hike today, right? I don't think they will, but they could. And that's the fear. Is you don't know what they're going to do until they actually announce it. It doesn't matter what they say. Bullard's come out and talked about, massively doubling down on quantitative tightening and huge rate hikes, and none of it's been realized at all. They say all kinds of shit. That's the point. Is you say negative things, hawkish things, if you will, right, to drive speculation out of the market, and then you come in dovish to protect your long position because the Fed doesn't want the fucking yield curve inverting anymore. Is that negging? Sort of. You're saying not to trust what our officials tell us. Okay, shill. There's nothing to do with trusting the officials. This is like an effective means of deflating a bubble. Or, well, that's what they're trying to do. I mean, we'll see if it's effective. It's an interesting approach. Although I think it loses its efficacy the longer they do it, which is because eventually people are just gonna, assume that the Fed is dicking around and over speculate anyway. Been pretty absent for a while. Can you give a quick update on where we're at in the cycle? We're approaching the ETF FTD overlap. It starts tomorrow. I think we'll see a small run, um, maybe up to like 140 feels like a stretch, but it's possible. I would say 132.50 is a better like upper price target. Um, and then we'll see the price get crushed back down until probably nearer the shareholders meeting. So I imagine through the week of May OPEX, after any gamma exposures covered, our gamma exposure almost flipped yesterday. So they really want today. I would imagine they really want today to end red in order to maintain that negative delta hedge. Sure, man. Dave Chappelle got attacked last night for what? Uh, Guy with a gun rushed the stage. Jesus. No, I haven't seen the video, Hornless. Will Smith made attacking comedians on stage acceptable. It was unlikely that you'd go a month without touching GME options. Yeah, but why would I accrue wash sales? Thoughts? I mean, I think GME OPEX runs probably still have more potential than BBBY August 15 calls, but BBBY August 15 calls are cheaper and likely a little bit safer. Got a margin warning on a cash account? How did that happen? I have no idea. Why don't you ask your broker? I didn't realize Fidelity was outsourcing their fucking customer service to me. Oh, shocked Wall Street reacts to Lyft's biggest crash on record. Lyft sucks, so does Uber. They're shit companies. Nothing but debt and operating in the red for years, waiting for fucking automated cars so they don't have to underpay freelance contractors anymore. Well, they try to trick people into thinking they give a shit about anybody. Let's say you bought Freg's Day weeklies and lost money on those, and then bought options for Feb, April each month after. Wouldn't the Freg's Day losses be a wash sale since you're buying replacements? No. Each contract is separate when considering wash sales. So if I buy like a 115C for like Jan, right? And then it loses money and I sell it, and then I buy a 115C for April. This is not the same contract. It's not a wash sale. Or if you lose money on a 115, buy a one like a 110, that's also not a wash sale, even if they're on the same expiration date. It's pretty hard to get wash sales with options. You have to be buying the same contracts. You have to lose money on a contract and then buy the same contract. Which why would you? If you've lost money on that contract already, why would you be buying into the same? Like, it doesn't even, you really have to do some stupid shit to end up getting a options wash sale. Do you have any hope for EV companies long term, like Rivian, Lucid, Tesla? No, I think they're all pretty much shit. I think if we do hit a recession and supply chain issues get worse, or there's conflict in Taiwan, it's not good. I think other, like, especially if we hit a recession, I think you know, just companies like Toyota and Honda are gonna do way fucking better than Tesla. And I still think Tesla's a fucking car company. I don't care what people say. Basically, it only matters in December and January. No, it's like 30 days rolling. So, like, if you sell a stock at a loss and then you buy back into that stock before 30 days, then you get a wash sale. Economy is shifting from growth to profitability, and investors need to get on board at some point. Yeah, Burry wasn't wrong shorting Tesla. Not at all. Just too early, which he frequently is. I have a suspicion that all these supply chain issues are just a marketing ploy to the new season of Deadliest Catch. They're running out of people that want to go fishing in the Arctic. I don't think they ever really run out of employees for that job. It pays well, and lots of people have outstanding warrants. All they're gonna do is dodge May OPEX. I don't think there's any obligations built up for May OPEX. I think they went very far out of their way in order to move the cycle forward. To try to reduce predictability. Yeah, probably 107 to 125. Below 107, buy pressure picks up. So they don't want it in that range. They want to reduce long interest at the bottom. Don't you mean there isn't a lot of obligations? Don't you just mean there aren't a lot of obligations? They took us from 199 about a month ago, now at just under 120. Yeah, but a lot of that was just people selling. That was just people selling out of their options and shit. I mean, there's been shorting, but it's been minimal. They're trying to return shares. The lack of action this morning, wouldn't this be a good time for them to crash the price bound? Sure. It's not really like, we're not going to see that much happen today until 2. Everything's going to like find a channel and then probably stay within it. There's not going to be a lot of liquidity in the market. Everything's just going to be kind of dull. Dull, boring day. Yeah, his share split also. He may. I mean, he does need to, through all of this, he does need to maintain a certain percentage of GameStop ownership in order to prevent like a hostile takeover. Not that anybody wants to hostilely take over GameStop, but Burry may be premature often, but his plot game is strong. He only has one child. Yeah, it's gonna be a pretty boring day till the Fed minutes. I think the market's more concerned with the quantitative ease or tightening side. Like we had negative GDP, so if they don't ease up on the tightening, we're gonna see a recession next quarter. Do you know when the RAD tender offer should come? No. That's why I bought Leaps. You could say retail did a hostile takeover of GameStop. Can you? The Fed makes sure that we alternate positive and negative GDP so we never officially get a recession designation. Sneaky JPAL. Yeah. Any more thoughts on silver? Don't think I saw it in the pics, but I think you mentioned it in Hot Tub. I did. I mean, it's cheap right now. If there's an economic pullback, silver will run. It'll probably run. I mean, it kind of runs in cycles anyway, but it's currently pretty cheap. So if it's something you're interested in, but it's kind of a long hold and you have to sell at the top, otherwise, just end up bag holding it when it crashes again. Do big companies like Apple split consistently? I mean, they split and then they do buybacks. So you split to pull in investors, you do buybacks to keep them. Yeah, I'll probably close out the covered calls I have later into today. The dip after every Fed meeting? No. It's rallied after every Fed meeting. I mean, immediately after the Fed meeting? Sure. Have you closed your AMD weeklies? No. $60 million volume traded so far today. I'm not closing shit. $90 billion in buybacks planned, around $90 billion in buybacks from 2021. Nothing better to do with $90 billion. I mean, at a 151 billion market cap, that's nuts. Sube is stonk goddess. Oh. This financial speak is all nonsense. I couldn't agree more. Oh, for Apple? I mean, Apple just has shitloads of cash, and yeah, I mean Warren Buffett pushes them pretty hard to do share buybacks. Berkshire is big on buybacks. It increases your earnings per share. It's fucking amazing. Why would people love buybacks? Thanks for the rig tip. Best $3 I've ever made. Congratulations. It's gotta be better than that guy who DM'd me on Reddit last night who was like, why would you look at AMD? It's not even worth as much as GameStop. Tesla dead. Victor, what's your price target on Tesla? Is 60 days of 100% GME utilization relevant? No. The problem with it is if it were true, first of all, the borrow rate wouldn't be dropping. Um, the other issue is that fucking Ortex only has the same data that's available to us. So they don't have any visibility into the full lending pool on GameStop. It's limited. The three folks who I know who have made the most money on trading have all been AMD heavy. How do you call yourself a trader if you don't only buy and hold GME? How many FTDs on your water bottle? 0. It's privately traded. Do you think 115cc weeklies on BBBY is still safe? 15 cc's? $15 cc's? No. What's it trading at right now? I don't know why you're saying still safe. I never thought they were safe. I didn't sell any covered calls on BBBY this week because of the FTDs. I was waiting. I think they're still risky, even with the price this low. Wake me up when it's fucking 2 o'clock. Jesus. Express is in the same basket as GameStop and Bed Bath and Beyond and all of those. I hate the fact that FUD around Fidelity. I hate the Fidelity FUD started because of a single data glitch caused by Vanguard, and yet Supersonic blindly rave about Ortex every day. Ortex is dog shit. They'll just rave about whatever tells them something even remotely bullish. Anything that they can latch their fucking massive bags of hopium onto. Whether it be disingenuous billionaires on Twitter or fucking shitty data from an awful data provider. Oh, my toe's still completely fucked. Is AMD having IV crush? A bit, yeah. Hey Greg, I want to LARP as Moonman. Are weekly 100 CCs on GME safe? Would you accept a Warren Buffett invitation to talk stocks over a meal of peanut brittle and ice cold Coca-Colas? Yeah. Is it worth buying long dated GME calls right now? It's not the worst, but you might have to hold them through some more dips. And then if you do, don't cry to me about it when you're down 50% in like early June. That's all. I also don't want to hear about how you sold them in early June during the late June run up. But I mean, if you can avoid those, Matthew, all the power to you. Thank you. What determines the severity of IV crush after an earnings date? The market makers. What are your thoughts on T-Doc's current week bounce? Nothing's gonna do shit today until after the Fed meeting. And then everything's gonna go crazy. That's rough. Sorry to hear that, Saituba. Do I like peanut brittle? Not particularly. Billionaires dangling petty cash over the pores. Yeah, whoever's got the saddest story gets a handout. It actually fucking disgusts me. I'm not gonna. That's not philanthropy. I have a sneaking suspicion that the government used the Declaration of Independence as collateral for the nation's debt, as being figuring out how to not get margin called by God. Have expectations for a squeeze with dividend changed at all since your last DD on it? You mean the one that I wrote 2 days ago? No. Any thoughts on AMD? I think the shorts are either trying to flip their positions or just suppress the price of the stock until the Fed meeting. Gamma neutral on AMD at $99. If it breaks, it's going to do some crazy shit. Anyone else playing Redbox? I'm not. I'm sure other people are though. Sock sock shoe shoe or sock shoe sock shoe. Sock sock shoe shoe. What kind of fucking animals putting on one sock and one. Imagine having a shoed foot, a shoed and sock foot, and the other foot is still naked. That's fucking. That's sickening. What's worse are people who wear shoes inside. TP over or under? Over. First of all, nobody needs so much toilet paper that they need it gravity assisted. We have some psychopaths in here. What about those who don't wipe? I mean, even if you have a bidet, you still have to dry your ass. Unless you're just walking around with a wet, like a wet, but freshly bidet ass. Milk then cereal or cereal first? Cereal first. First of all, socked feet before you put your shoe on. cereal in your bowl before you add milk. And toilet paper over the top. Unless you're just an actual piece of shit. Flip it. I don't put milk in my coffee. I drink it black. Not only do I have a harsh anti-air fryer stance, I have a harsh anti-truffle oil stance. Stefan, stop being everything I hate. Please. Eagerness, truffle oil, air fryers. Just dial it back to, like a 5. Separate your laundry or throw it all in together. I mean, all of my shit is essentially made out of the same material. So I have very few laundry items that I can't wash together. I mean, like, I wash my, like, underwear and socks together because they're grosser. Because it's French. You call it a biddet. You'd fit in England. They like to mispronounce French words a lot there. Oh, 100% standing. I don't want the back of my hand to touch the toilet seat. Daniel Mushrush. But you know what's even worse than that? People who wipe back to front. You wet your toothbrush before or after the toothpaste? Before, otherwise you'd wash the toothpaste off. At least we found something to do till 2 p.m. Boxers, briefs, or commando? Briefs. Wait, no. What are the ones in between? What are those called? Those. The ones that aren't briefs or boxers. Borfs? Boxer briefs? There we go. Yeah, boxer briefs, thongs, and banana hammocks. I need a like button song. I think Dan for Hire was working on something recently. Oh, fuck you, Walford. Do you guys ever wash your toothbrush? Do you rub the splinters off of chopsticks or do you pull them off? I rub the splinters off of chopsticks and I do it really visibly to insult the business owner for giving me cheap chopsticks and not spending the extra 3 cents for the better quality unit. Hmm. Bones, I feel like at this point that should be fairly common sense. Do you want to be a little more specific there besides just good versus bad? I prefer the pull through the front boxer briefs. I hate going over the top. It's just like fucking reaching in and digging your snake out. That's a lot of work. Also, it looks like you're jerking off at the urinal when you do that, which, let me tell you, is disturbing to other people. Only the unemployed and drug dealers wear boxers. How to be a human being. I mean, it is. You gotta line it up and then thread it through a hole. Like it's too much. You just go over the top. It's more efficient. I prefer pulling mine through the leg of my briefs and straddling the bull. uh, this is by far the best stock stream. Good morning, Pickle Man. Which stocks would you prefer to day trade today? None? There's a Fed meeting at 2 p.m. Jack shit's gonna happen until then. Oh, we already did sit or stand to wipe. Have you looked at BBWI at all? A few times. I didn't buy any of it, so it probably wasn't that great looking. What's up, Daddy's little nut meat? How you doing? Were you just waiting for this moment? 2 p.m. MJ. There was like some thread on Reddit last night about like how men should be more complimentary to each other. And I need to find the cartoon, but it's like some dude standing next to this other guy in a urinal, and he's just like, nice dick, bro. Shake or squeeze after peeing. Alternatively, have a healthy prostate. What does it take to move a company's stock from the NYSE to NASDAQ? I have no idea. I've never had to do it. I know what happens, I just don't know the process. You're streaming Fed earnings today. Sweet meat, homie. Helicopter maneuver ensures no leakage after peeing. Oh man, this place has got way too many dudes. You explained what it's like when you're waffling your poo. What does that even mean? Have you ever sat on the toilet backwards? Of course. It means stomping your poo down the drain? Ew. What are people like shitting in showers? One time I was at 24-hour fitness and somebody had shat in the shower. Just like kind of in the corner. That was weird. I don't know who did it, but it was just there. So I was at the right 24-hour fitness. Nice, Gordy. Hit gamma neutral on AMD change with the sell-off of calls in the morning. Yes. Biden about to talk on the economy ahead of FOMC. Buckle up. Interesting. It's 99 is gamma neutral, not delta neutral. No, it's gamma neutral from market open. But it's also the full chain. So most of the calls getting sold off at market open are going to be weeklies. Flores. It's like they know we're in CAT and AMD, so now they're just crushing them too. Fair. When nap stream? It's coming. I'm already very tired. I wouldn't be surprised if I fell asleep on stream again. Want to stream the president's economy talk? Send me the link. Looking at a Gimi entry, what do you think of the current prices? It's pretty cheap. It could be cheaper. Any idea why X down 2%? There's not a lot of money flowing into commodities right now. And yes, they beat on earnings and they should not be down. The gamma reversal on AMD is at 120. That's exciting. Holy shit. Yeah, GN at 99.58 after market open. On TV, what does it mean when the earnings tag thingy is white, i.e. not red and not green? It usually means that it met expectations or like met estimates and earnings came in at the same price. Or they just haven't been reported yet. Of course. I mean, if the market crashes, GameStop's gonna drop hard. Listen, if Warren Buffett's still investing people's money at like 92 and Charlie Munger at 98, Biden's fine. He's not gonna die. Good entry for 30CX leaps, or wait till after the Fed meeting. I'd probably wait till after the Fed meeting. What is gamma reversal? It's the point in the chain where the gamma hedge reverses. So it's like the put call flip, but more important. Oh, hey.
Instead of the hundreds of dollars, even $1,000 a month for some families. And my plan promotes those utility CEOs here in the White House. And they confirm this plan will lower energy bills for families immediately. My plan includes tax credits for consumers to purchase electric or fuel cell vehicles, new or used, which will save the typical driver about $80 a month not having to pay for gas at the pump. Tax credits for folks to buy solar panels and heat pumps and more efficient windows and doors for their homes. Estimated savings $500 per year on average. And we can do these things by making sure that no one earning less than $400,000 a year will pay a single penny more in federal taxes. All we're asking is that the wealthiest Americans and the largest corporations begin to pay their fair share, at least part of their fair share. You've heard me say it before, I'm a capitalist. I believe you should be able to make much money as you legally can, but just pay your fair share. There's no reason why a billionaire should be paying a lower tax rate than a teacher or a firefighter. That's in sharp contrast to what today's Republican Party is offering. And if they hadn't put this in print, you'd think I was making it up. Senator Rick Scott of Florida, United States Senator, who's leading the Republican National Senatorial Campaign Committee, released what he calls the Ultra MAGA Agenda. It's a MAGA agenda, all right. Let me tell you about this Ultra MAGA agenda. It's extreme, as most MAGA things are. It will actually raise taxes on 75 million American families, over 95% of whom make less than $100,000 a year. Among the hardest hit, working families, kids with folks. Imagine you're a family of four and you don't make enough money to have federal taxes. Because you don't make enough money to pay them. You pay all your taxes, but you just don't make enough. And under this new plan, this tax plan, the Ultra MAGA agenda, while big corporations and billionaires are going to pay nothing more, the working class folks are going to pay a hell of a lot more. And it goes further than that. This extreme Republican agenda calls for Congress. Now, I'm not making this up either. You ought to really think about this. It requires a vote, if it were to pass.
Is this bullish?
Every 5 years.
I don't know. That's what I'm trying to find out.
The Congress would have to vote to reinstate or eliminate Social Security, Medicare, and Medicaid. Social Security is something seniors have paid in for their whole life. And it has to be reauthorized. Has to be reauthorized every 5 years. Look, again, it's hard to make this up, but then again, it's a mega agenda. You know, meanwhile, millionaires and billionaires and corporations skate by. Imagine that. Just imagine that. I think it is truly outrageous.
It is political theater, but it still affects the market.
American values of fairness and decency. Wealthy folks and corporations will pay a little more. Billionaires will have to pay a minimum tax. And again, most importantly, no one making less than $400,000 will pay a penny more in federal taxes. We're going to protect and strengthen Social Security and Medicare, not put it on the block every 5 years. Let me remind you again, I reduced the federal deficit. All the talk about the deficit from my Republican friends, I love it. I reduced it $350 billion in my first year in office. And we're on track to reduce it by the end of September by another $1,500 billion.
It's got him all fucking riled up
the largest
today.
drop ever. I don't want to hear Republicans talk about deficits and their ultra MAGA agenda. I want to hear about fairness. I want to hear about decency. I want to hear about helping ordinary people.
It's going to break that.
The bottom line is that for
pedestal.
decades, the trickle-down economics has failed as income inequity grew to historic levels under the Republicans, the mega Republicans, the MAGA Republicans. I don't want to mispronounce it, the MAGA Republicans. This is time to grow the economy, but from the bottom up and the middle out. Because here's the deal. When the poor have a ladder up and the middle class grows, the wealthy always do very well. They do very well.
I mean,
that's what this is
not
about.
as well as they do when everyone's
That's what
poor.
this is about. Everybody doing better. And so I want you to understand, again, first year, $350 billion reduction in deficit. This year, $1.5 trillion. It's going to bring some relief. Thank you. I take a few questions quickly.
Mr. President, may I ask you a question about sanctions? The EU, about sanctions against, or about further sanctions in Europe. The European Union today announced new sanctions against oil, against Russia. What's the next round for the U.S.? And also on a separate
Which
issue,
armrest is
what's
yours
the
in the
next
movie
step
theater?
on abortion once
Both?
this case gets settled?
I want to ask about
Oh,
deficits, huh?
Sit next to
I want
someone.
to make sure this doesn't
I
get
watch
covered.
movies
Okay,
in my
here
house.
we go. I'm going to answer those two questions and then go out to talk to the Olympians. With regard to the additional sanctions, we're always open to additional sanctions, and I've been in consultation. I'll be speaking with the members of the G7 this week about what
Does
we're
he
gonna
work
do
under
now.
JPOW? Yes.
Number one. Number two, what was the second one? You want, look.
The second one was on abortion.
As I said when when this hit, as I was getting on the plane to go down to Alabama, this is about a lot more than abortion. I hadn't read the whole opinion at that time. But this reminds me of the debate with Robert Bork. Bork believed the only reason you had any inherent rights was because the government gave them to you. If you go back and look at the opening comments with the Bork-Biden when I was questioning him as chairman, I said, I believe I have the rights that I have, not because the government gave them to me, which you believe, but because I'm just a child of God. I exist. I delegated by joining this union here to delegate some obligation, some rights I have to the governments for social good. So the idea that somehow there is an inherent right, that there is no right of privacy, that there is no right. And remember the debate you don't remember, but we had a debate about Griswold versus Connecticut. There had been a law saying a married couple could not purchase birth control in the privacy of their own bedroom and use it. Well, that got struck down. Griswold was thought to be a bad decision.
I want an
Working
atheist
on,
president.
My guess is the guy.
It's more in line with the ideals
What
of our
happens if
founding
you
fathers.
have state changes the law?
Separation
saying
of church and
that
state, right?
Children who are LGBTQ can't be in classrooms with other children. Is that legit under the way the decision is written? What are the next things that are going to be attacked?
Did he just say
Because
legit?
this MAGA crowd is really the most extreme political organization that's existed in American history, in recent American history.
Would you make a speech on abortion like you did on voting rights, Mr. President? Mr. President, how can you combat it?
Pastafarian? Well, it's not every day that you see an 80-year-old say legit. All right, well, that was short-lived. Sorry, we've run out of theta. I'll take more questions tomorrow. Do you raise the taxes or not? Who gives a shit? None of you guys make enough money to care. I can say that to this entire audience and be 99.9% accurate. That's not true. Well, Pops are in Trader, you can write off your losses though. Do you support raising taxes on the wealthy? Yeah, fuck them. When Pulte trickle down. I'm gonna now refer to my bags as tax write-offs. I can't get behind taxing unrealized gains. That will affect a lot of smaller investors also. No, it won't, because you only get taxed on unrealized gains if you have like over a certain net worth. Or at least that's the way it was originally written. We'll see what happens, but General Tso's chicken for lunch today? It could. See how little normal people know about taxes, but they all have opinions. Well, opinions are like assholes. Everyone has one. They should just tax every trade a penny. That's the solution. The government needs some fucking money. Put a 1 cent tax on every trade. They do that with options. I mean, they charge a fee. That's like a brokerage charges fees. Thanks, True State. I appreciate your Canadian votes. Why would day traders be in shambles? It's not one. It's per trade, not per stock traded. 1 second. HFTs would die instantly. I know. It's fucking awesome, right? So would PFOF, but that wouldn't be so great. Another Canadian vote for you. If you can name the capital of Canada. Fuck. Is it like Ottawa or something? I didn't Google shit. Is that right? It's Winterpeg. New York is not the capital of America. I think it was at one point, along with Philadelphia. Dirk, you should run for president. Yeah, that would work. Oh, like 8% of the audience is Canadian. Hold on, I gotta order some food here. Let's see if I can order General Tso's chicken. I don't even like it that much. I'm not gonna fund my own campaign. First Persian POTUS. Any good Philly cheesesteaks in your area? You can find them in New York, but they're not. I wouldn't call them the best Philly cheesesteak I've ever had is still in California. Just hands down. I mean, the people were from Philadelphia, but they didn't make them in Philadelphia. You could run against Meet Kevin. I think I know who that is now. Maybe. He's like some like YouTube financial guru, right? Tells you how to invest your home equity. That's awesome, Hestia. Happy birthday to your cat. In California, what restaurant? I've been looking for a good one. It's called Philly's Best. No, is it Philly's Best? Hold on. It's not Philly's Best. Frank's Philadelphia. That's what it's called. And it's in fuck is it? Costa Mesa. Based on percentage, they don't, J-Ken. If you're talking notional value of taxes paid, yes. But percentage value, no. Hearing that you don't like General Tso's chicken is the last straw. First you talk shit about my air fryer. Now this. Dillionaire membership canceled. Cool. I'll see you later, Twin Peaks. Have a good life. Make sure you unsub, unwatch, and dislike the stream on your way out. Okay, I lied. I'm here for good. Okay. I inserted in another live stream. If interested in another live stream, DM'd on Discord a link for a Janet Yellen interview, just starting with Wall Street Journal. Oh, that's going to be so full of bullshit. All right. Fuck it. Let's see what Yellen has to say. When's this go live? Hashtag Gherkfreg 2024 fund. Thanks for funding the campaign, Tim Timmery. I appreciate it. Here's what I don't understand. Poor people protecting the interests of the rich. Fuck them. Why do you care if rich people have more money? You don't have as much money as them. But I might be rich someday. Yeah, then change your tune afterwards. because they earned it? Who the fuck cares? People earn shit all the time and it gets taken away from them. You can, here, give me one good reason, just one, that Apple needs $500 billion in cash.
Secretary Yellen, thank you very much for joining us today. It's good to see you. We really appreciate you taking the time.
Thanks so much. Thanks for the invitation.
And also, before we start, I want to make sure to thank our audiences on Twitter, WSJ.com, and YouTube. Well, Madam Secretary, it's no surprise. I think the first thing I want to ask about is the state of the U.S. economy right now. We've had an enormous amount of data in recent days. Of course, here at our conference, we've been talking about inflation. We saw the GDP contraction in the first quarter, but we also see wages are up, housing remains strong.
Wants to be a millionaire.
Enormous amount of data painting a somewhat confusing picture. What's your best assessment right now through all of that of how healthy the economy is? What are the biggest risk factors? What are you watching most closely?
Sure, thanks for the question. Well, I feel quite good about the strength of the American economy. The labor market is really strong. Yesterday, we got the so-called JOLTS data on job openings and turnover, and job openings are at record highs. Unemployment is exceptionally low. Just during the first quarter of the year, when COVID was an
She's got a
issue,
Herman Miller.
we still had 1.7 million workers added to payrolls, and jobless claims are at multi-decade lows. So the labor market is very strong. First quarter GDP was negative. That's gotten some attention, but that's not really a good read on the underlying strength of the economy. The underlying strength of demand is probably better measured by looking at a metric called real final sales to private domestic purchasers that takes out inventories, government spending, and net exports, and it gives a very good read on private sector demand. And so that grew at 3.7%, and it means consumer spending and business investment remain very strong. So it was a peculiar bottom line reading on GDP because inventory investment was very high, but less than it had been in the fourth quarter of 2021 when companies were restocking inventories, and net exports subtracted from growth. That's because America is outperforming other countries. And, you know, when you look at metrics relating to the financial health of households and businesses, that really looks very strong. And credit quality remains excellent. Banks are well capitalized. So I see the U.S. is very strong now. But look, inflation is too high. It's necessary to bring that down. And the global economy is buffeted by risks. Energy prices are up, oil prices, food prices are up.
How long do we have? We got another
Russia's unjustified, unprovoked war on Ukraine is leading to an escalation of commodity prices that can have a toll globally. The IMF recently lowered their outlook for global growth, concerned about emerging markets where debt is already too high, where in many countries there are food shortages even before the Russian war on Ukraine. Europe, we could see slower growth, a downturn, and some of that could spill over to us. And of course, we're on a path where the Fed will be addressing rising inflation. So I do believe we're going to see solid growth in the coming year with inflation coming down, but there are clearly risks to the outlook.
So that's a great survey. I want to unpack some of those components in turn. To stay on inflation for a minute, as you mentioned, the Fed is meeting today. The expectation is that they're going to
All the numbers look
rates
bad, but we
point.
think it's
I
going
know
to
you're
do
not
just
going to
great.
comment directly on your successor of the Fed, but realistically, having lived through inflation, knowing what it's like, and this inflation has certainly lasted longer already than the administration expected, and it is taking a toll on households. It's eating up people's wage increases. How far do you think they're going to need to go, roughly, for how long, to really contain this inflation bout? How bad does it have to get?
10 years.
So you're right that I'm not going to comment on Fed policy. I think no one respects the independence of the Fed more than I do. It is the Fed's key job to make sure that inflation remains low and stable over the medium term.
Should I get dumplings?
I know that the Fed is committed to doing that. There's
I'm going to
also
get General
an
So's
employment
chicken.
mandate, so I'm certain that the Fed will try to deploy its tools to achieve a soft landing where the economy can continue to grow.
Okay.
We avoid a recession,
then
but inflation
do I get them
comes
fried
down.
or steamed?
I said before that the Fed will need to be skillful and also lucky to achieve that. But I believe it's a combination that is possible, in part because although inflation has been very high and that's taken a real toll on households.
That with the unrealized gains of a firm of $2 billion,
really
investment Shopify is trading at 186
it's not
PE,
deeply
and
ingrained
even with it now at
into the
negative
US
72%, it's
and
still
I don't
69
think it's
PE.
influanced
I'm smelling another
medium-term
put
inflation
opportunity.
expectations
You should.
significantly. And in that way, this is a different situation than Paul Volcker faced during his term as
Maybe
chair.
I'll just get the dumplings and hot
I think
chili
a soft
oil.
landing is
A little
possible.
more traditional.
Clearly, there are dangers and the outlook is uncertain, but I do believe that's possible.
They don't have bow
I'm going to get to a couple other things, but
at this place.
One specific thing I do want to ask you on inflation in this regard. I mean, one of the, as you know, one of the criticisms for the administration and for the Fed really had been underestimating the toll of inflation a year ago. One of the criticisms made of the administration, and really it goes back to the prior administration as well, is government stimulus spending related to COVID and the bill that the administration passed earlier last year helped feed this. You're an economist. You understand the causes of these phenomena. What's your take on how responsible government spending was in helping contribute to the problem that we're facing now on this front?
So, look, inflation is a matter of demand and supply, and the spending that was undertaken in the American Rescue Plan did feed demand. But I do think it was justified and appropriate at the time, given the risks that the economy faced. At the time that President Biden was inaugurated, we had an economy where forecasters were envisioning very high unemployment for a very long time. We had especially low-wage workers who had been laid off in massive numbers. We saw cars lined up for miles at food banks, Americans worried about not being able to feed their families, get enough to eat. And forecasts were really quite dire. And that was one of the biggest risks we faced that we wanted to address. And really, the memories of the recovery following the 2008 financial crisis were very much alive in policymakers' minds, where it really took a decade to recover for the Great Recession to really fully end in the sense that full employment was regained. And during that period, long period of recovery, there was a lot of scarring. A lot of Americans dropped out of the labor market, didn't get jobs, were unemployed for a long time, and really never regained employment. And the desire was to avoid that. So when you look at the labor market now and you see the
Janet Yellen and Christopher Walken should do an audio book
this is
together.
Really a measure of huge success.
You just read every other word.
That we're experiencing now is perhaps slightly driven by a labor market that is almost historically tight. But on top of that, we have a lot of pandemic-related supply shocks, energy price increases, supply chain problems that I think are directly related to the pandemic. And that's why you're seeing inflation globally in almost all advanced economies where there was less stimulus. So, look, I think when you think about the dogs that aren't barking, households are in good financial shape. We avoided a lot of scarring. The labor market is very strong. These are successes from the policies that were put in place, problems that we might well have had and don't have because of the policies that were undertaken. But it is important to get inflation down to low and stable levels, and that's the Fed's job mainly to accomplish, although for its part, the White House, the Biden administration
Persian day
is
trader
doing
order
what it
dumplings
can
over the
to
sounds
also
of a
address,
geriatric
for
economist
example,
lie to
high
the
energy
American
prices
people,
by
and I wouldn't have it any other
releases
way.
from the
What a time to be
Strategic
alive.
Petroleum Reserve.
Thank you so much,
Doing
Walford.
what we can to make sure that we relieve congestion at the ports. But look, now you're seeing COVID lockdowns in China, and these are factors really outside our control that unfortunately threaten to prolong supply chain disruptions.
Would it be called Walken and Yellen?
Our economy with spillovers too.
You mentioned energy a couple times, and let's just talk there. Energy was already challenging, and as you noted, since the war between Russia and Ukraine, the energy shock has only grown. So it takes a long time normally to work through supply issues when it comes to energy. So as you look out in the forecast, how long are we facing, do you think, roughly a certain kind of energy crunch, supply crunch here? It seems like that's something liable to be with us here for a while.
Well, I agree. I mean, a reason why the president committed to release 1 million barrels a day from the Strategic Petroleum Reserve was to give American producers time to ramp up production.
Too soon.
Unfortunately, I think most producers of oil from shale, they experienced during the pandemic very low prices and expected the recovery to take a long time. And they actually cut production rather than ramping it up. And so it really is necessary to see supplies increase. In the meantime, we have the releases from the Strategic Petroleum Reserve that have helped. There's also a very strong desire around the world to make sure that Russia is not able to use proceeds from its sales of oil in global markets to finance the war. And so very naturally, Europe, the United States has now banned imports of Russian oil. We've had an announcement this morning from President von der Leyen that the European Union is looking at cutting off Russian oil imports over a span of the rest of this year. We need to see the conditions, exactly how this is going to be accomplished, because it could lead to higher global oil prices as well. But the desire to
imagine
to Russia's
thinking
unprovoked
that
attack
just because someone's
on Ukraine
old, they
and to
don't
bring
know
the war
shit.
to an end
This woman's
is
been
very
fucking
understandable and important.
manhandling the U.S. economy longer than you've been alive.
Yeah, I was going to ask if morally, ethically, the EU action it obviously comes from that place. Economically, is it wise? Is it worrisome to you?
So, I'm not sure that I really understand the details of how this is going to be accomplished. I think it's very important that Europe is going to rid itself of dependence that it has on Russia as a
When
source
Chair
of
Pow go burr,
supply.
2 p.m.
And we clearly want to work with Europe to make sure that they have the energy supplies that are needed. I think we need to do what we can over the next year to make sure that we limit the revenue that Russia's able to get from selling oil in global markets, and also do what we can to make sure that we don't see a large escalation in global oil prices.
A couple of other aspects of the economy right now.
It's like we're watching an awards show with all kinds of intro speeches by various top dogs.
Now, you're known, I think, as a bit of a dollar hawk. The dollar has grown
There's
quite
more
a bit this
showmanship
year.
in U.S.
Like, would be
economics than there is in anything else.
that the dollar's getting too strong, and what could we do, if so, to mitigate that?
Would you rather have her or
Look,
Gensler
I
babysit your
believe in
kids?
Market-based value for
I don't
the
trust
dollar.
Gensler. His head's too shiny.
When countries are taking actions designed to purposely
I think
push their
Shopify's
currencies
overvalued
down to
still.
gain an unfair trade advantage vis-a-vis the United
You
States.
know all the, like
the United States
Shopify
is prepared
and
to
that other
respond
one,
strongly
Affirm, are just
to,
gonna get hit with waves of
purposeful,
defaults on
attempts
debt they'll never be able
of
to
other
collect.
countries to devalue their currencies, but believe in a market-based value for the dollar. Clearly, U.S. interest rates are rising, have risen relative to those in the rest of the world. And so one of the factors that's
Sexism and
at
ageism
work,
is
I
superb
think,
in this
pushing
chat
up
today.
the dollar
It always is. I don't understand why people like hate old people.
Investments toward higher yielding returns in the United States. And in a way, that's part of how a tighter monetary policy works.
I want to ask you two other kind of broader questions about the economy.
Okay, boomer.
Right now.
I mean,
one is moments like this when
you just think you know more than them.
Markets are in some flux, as ours have been, and coming down.
You don't.
It's moments like this where you sometimes tend to see problems come out.
There's value in experience.
You were actually an economist who nearly 20 years ago, was warning about the subprime mortgage problem before that manifested at that time. So as you look across the economy and think, where could potential problems lie? Where could things be lurking that we haven't seen below the surface? Are there particular areas of concern?
That's fair. I don't like Yellen very much either.
Looking at closely.
So banks are quite strong. I think that the reforms that were put in place by Dodd-Frank after the financial crisis have led to more capital, more liquidity, and better risk management in the core of our banking system. banks have endured a lot of stress and have been able to meet
I
the
don't think.
credit
I mean, I
needs
don't
of
think
the
Yellen
economy.
had
That's
it
sometimes
easy
a
growing up.
sector
Isn't she
where
from like
we have
Brooklyn?
concerns.
She grew up a poor.
We did see when the pandemic
There's
struck
nobody who
stresses
grew up
that
rich
showed
from
up
Brooklyn.
in the non-bank financial sector, in money market funds, open-end mutual funds, often bond funds, perhaps in the hedge
If
fund
Yellen was good at
space.
her job, then there wouldn't be a
And
wealth
certainly
more wealth
stresses
disparity
in
than the Gilded
markets
Age.
that
That's
caused
her
the
job.
Fed to intervene to stabilize things in
Oh,
a really
I see the
almost
misunderstanding.
unprecedented fashion. And the Financial Stability Oversight Council, working with the SEC, we're working to address weaknesses in those sectors to make it less crisis prone. So I feel good about the strength, the overall strength of the financial sector and its resilience. Asset valuations, the Fed has noted in its recent reports and in the FSOC annual
Why do people
report,
think
we
all these
noted
people are
that
supposed to be
asset
working on their behalf?
valuations are high in housing.
That's an
Obviously,
issue with
there's been a huge
perspective.
increase in housing prices. Ratio of price to rental rates is high. Price equity ratios in the stock market are high, but I don't think we have the same dangers that we had in the run-up to the 2008
Yellen net worth 60
financial
million.
crisis.
That's
For
nothing.
example, in the housing market, credit quality is excellent. We don't have the kind of mortgage practices
That should
we
be
saw
the
in the
testament
run-up
against
to
her
that
economic
crisis.
prowess.
But the
She's
outlook
fucking
is
75
very
years old and she only
uncertain.
has
The
$16 million.
dangers at the global level are high. I do worry about commodity prices. I am worried about spillovers from Russia and Ukraine that can have adverse impacts, not just on the US that is strongly positioned, but on Europe, on emerging markets that, you know, could have
The government is
spillovers
supposed
to
to
the
work for the
United
interests
States.
of the citizens.
That's
It
where my
does, just
concerns
not
are
all of them.
centered.
Labor economics, I think, is your specialty as an academic. One of the things we've talked a lot about at our event in the last 24 hours is how volatile the workplace is. How will people be back 2 days? Will they ever be back 5 days? How many people will go remote?
Y'all are tripping
How many
something
people
fierce.
will
Yellen
move
is
away
for
and never
sure
go
a
back to a
gilf.
headquarters? What will happen with office space? It's obviously an incredibly dramatic and uncertain time right now and for reinvention. So when you think about those aspects of the labor market and the health of the economy, what are you seeing? What are you watching to try to understand changes in behavior and think about what might be temporary, what might be permanent, and to understand what's going on?
Well, I agree with you.
She's
I
the
think that
Secretary
the
of the Treasury.
pandemic really provoked very significant structural changes in the workplace, and some of that is going to prove to be permanent. You know, some of this I think is really
I think everything
healthy
saw something they liked.
innovation in how we work, how we interact. The fact that we can be doing what we're now doing over Zoom really changes the way people live and work. And I do think that's a healthy development. Clearly, people are changing jobs. We saw massive amounts of job shifting across sectors during the pandemic and in its aftermath. And so there's a lot of structural change taking place. Overall, in the labor market, what I see is a very healthy labor market where people, especially at the lower end, in lower wage jobs, are seeing very significant increases in their wages, which has been a long time coming. and people are moving to opportunities and to kinds of work. Quitting is at record highs that we're ever seen in the statistics. And part of that is a good, healthy reallocation of people across jobs and sectors where there are better matches and they can achieve their potential.
I'm going to go to the audience in a minute. I know there are people with questions. I had a list of policy things I wanted to get to, but I'm going to ask you one of those.
She's this bullish. 2 p.m. is going to be a bloodbath.
One of your big initiatives
right?
has been the global minimum tax. It was going to be part of
increase in wage 3%, inflation 20%.
Now seems well, not very likely, I guess, is a fair way to put it. In Poland, it's faced resistance. Is the global minimum tax going to make it, or is it not going to ever get to?
Yeah, versus like high quality jobs.
Well, I very much hope that it will be enacted. I feel it's an incredibly important
We're watching Janet Yellen
initiative
drone on
that is in the interest of the United States and countries throughout the world. And what we've seen over decades is a race to the bottom in terms of corporate tax rates. One country lowering tax rates to attract businesses and others responding. And I think putting an end to that unhealthy competition so that all countries have some ability to raise revenues, create a level playing field for businesses globally, but raise the revenue that we need to invest in our economy, in infrastructure, in investment in people, to make our economy productive. This is a very healthy shift. I think if any reconciliation package is passed in the coming months, certainly Democrats, I believe, unanimously favor it. The provisions that would be necessary in the United States for us to be in compliance with the global minimum tax, they were included in the House-passed package. So if any reconciliation package is passed, I expect us to come into compliance. I think the EU is very close to adopting the global minimum tax. You mentioned Poland. Poland was a holdout. I think Poland has some issues with the EU. Frankly, I don't think that they largely pertain to the global minimum tax itself, but rather other issues between Poland and the EU. So I really expect the EU to pass this into law this spring. And I think that would be a good example to the United States to show a very significant piece of the economic activity in the world has come into compliance, and it sets a good example for us.
So you have real hopes, it sounds like, that reconciliation is going to maybe get this done if nothing else comes along. So it's very much alive for you, it sounds like.
Yes, I mean, I don't know what will happen with reconciliation, but I remain hopeful that some reconciliation package will be passed. And I believe that this will be a component on the revenue raising side if any package becomes law. And, you know, look, I think this is an important initiative, and I would love to see bipartisan support.
Same
for
hairstyle.
it. I think it's broadly in the interest of the United States and not partisan.
Do we have questions out here, anybody? If we could turn up the lights for a second. Anybody have any questions for
Wait, there's
Secretary
people
Yellen?
there?
James?
Could I ask about the future for the dollar, and in particular whether you see any limit to how much the Treasury you oversee can take advantage of having the global reserve currency to enforce foreign policy sanctions, most recently confiscating Russia's reserves, obviously, is the key for the question here. Is there some limit you can't go beyond before countries stop using the dollar as a safe store of value, particularly countries that worry they might fall on the wrong side of America at some point?
Well, I mean, certainly the fact that the dollar is used so widely as a reserve currency does mean that the U.S. has the ability to impose sanctions that can take a severe toll. That ability needs to be used sparingly, wisely, and when it comes to sanctions as severe as those we've imposed on Russia, the hurdle, I think, for imposing such sanctions needs to be high. We have only
We'll show the world why
rarely,
we don't have
in the case
universal
of
health
Iran
care
and
if
North
they resist
Korea,
the dollar.
impose sanctions on a country's central bank. And the decision to do that to Russia is not one that was undertaken lightly. I would point out that it involved a very broad coalition of countries that felt that it was warranted.
Here's something that blows my mind that I just thought of.
Prevail. But we had the entire
The
G7
people most staunchly
and other
opposed
countries,
to
even
universal health
including
care.
Switzerland, that felt that this was an appropriate sanction. So the bar is not low, and I think it should be high. But I think we value very much and gain from having the dollar used as a reserve currency.
Also are pro-military.
There are very good fundamental reasons based on the strength of the
which
U.S.
has
economy,
universal health care.
the stability of economic management, the liquidity of our markets, the safety of the dollar, our rule of law and institutions that make the dollar an important reserve currency. I don't see any other currency at this point that could begin to rival that.
And Madam Secretary, I know we're short, but I'm going to take prerogative. This is the last question, I promise.
We could just do what Israel does, and everybody has
hadn't really gotten to
like
Russia.
mandatory military service.
You've been the point
and
person
then
for
we're
Russian
all
sanctions.
veterans.
Let me ask you two Russia-related questions to end. One is, we've imposed various rounds of sanctions on Russia. How much more potentially could there be, and how much more, even beyond what it is, severe could it get?
Oh, it's absolutely. I know it's.
And by the same token, when you think ahead,
a bunch of friends that are former military.
The war, are you yet thinking in any way about whether and how it might even be possible to reforge some economic ties with Russia down the road?
The people most opposed to universal health care, health insurance
even
companies.
After the war, Russia is
yeah.
going to be isolated for the foreseeable future. How are you thinking about that?
Well, let me just say, we're certainly are looking at further measures that we can take to respond to Russia's aggression against Ukraine. And we're in constant discussions with our partners about further sanction packages. I don't want to.
I said the people were pro-military, not part of the military.
There are certainly additional actions that we can take and probably would take if Russia continues this war against Ukraine. Although I do believe our sanctions have been quite effective and have really made a huge difference to the economic outlook, both long-term and short-term in Russia.
Yeah,
Inflation
I've seen it. There's a bunch of studies on
the Russian
benefits of
economy is
universal health
clearly
care economically.
going into recession. The Russians have admitted that, and it's taken an enormous toll in terms of foreign investment and access to goods that Russia needs to compete over the long term. I think it's really damaged
Fed meeting
Russia.
predictions,
But
they do a
yes,
180,
there's a path
reduce
to
rates, and start paying
de-escalation of
companies on
sanctions.
interest on the
And
debt they hold.
if,
Dude, if they do
you know,
that,
if
BBBY is
there's
going to
a
the moon.
truce that's reached or a peace agreement, it would be certainly
Do you still have to
appropriate
register for the
to
draft? Yeah.
consider a path to de-escalation. And I don't have anything specific to give you on that, but certainly
It's universal
that
if you're in the
is part of
military.
the thinking.
Okay, well, Treasury Secretary Janet Yellen, thank you very much for taking this time with us today at such an eventful moment. We really appreciate your time, so thank you very much.
Thank you so much, Matt. Much appreciated.
Good to see you. I also want to thank everybody watching again.
Well, that was, yeah. Not overly informative. Claps from the soundboard. Oh shit, my food's gonna be here in 5 minutes. Why is Uber Eats telling me it's raining? I feel like that's information that's important to my food delivery. Upstart? Looks like it's already running a little bit. I don't know about descending wedge, but it's descending. Yeah, it could bounce. I mean, the high doesn't look all that promising, but it might be. AMD looking for more breakout. Was that UPS? Oh. I think my keyboard's breaking. I mean, I don't... If you're talking about on the intraday, I don't love the potential there. It looks good out here, though. Move back to like 118. Actually, it looks really good. I'd be a little bit worried about 93, though. There's a lot of resistance there. Yeah, I have a mechanical keyboard. Do you tip your driver and understand why it might be a bit late? I mean, I already tipped my driver, though. Like, that happened before they told me it was raining. Would I have tipped more? I don't know. I feel like 20% is pretty fair for the 50 feet they have to walk my food to my apartment. One second. My food's, I think my There we go. Yeah, if it breaks 93, I might consider getting in, because then, you know, then your target's like at least 117, which is a nice move. But, you know, fucking 90 to 93 isn't really very impressive, right? So it's almost worth waiting for that crossover of the EMA 30. Let me know if it does, by the way. Oh, nope. Let's see what we got here. Okay, I'm not gonna lie, that looks fucking good. And I have egg rolls? Duck sauce. Dude, they sent me free egg rolls. Wait, Trash, have you ever had duck sauce? I don't know if that's a thing outside of, like, the Northeast. Show the camera? Can you guys read the writing? It says duck sauce. Come on. It's not plum sauce. It's apricot and peach. You guys probably, in California, they have sweet and sour sauce, which is like bright red sugar syrup. And it's fucking disgusting. What they didn't send me was chopsticks. Okay, first of all, MSG is delicious. And they probably don't use it in this food. The General Tso's chicken looks very basic. I regret ordering this already. I should have just gotten like something good, like sesame chicken or kung pao. I got dumplings right here. And egg rolls. New York City rats will appreciate the floor rice. I didn't spill that much. I can't imagine eating fried chicken and bananas in the same meal. Plantains are not incredible. Plantains are potato bananas, and they're gross. SoFi is ripping. If I look at it and it's up like 5 cents, I'm gonna time you out. It's up 40 cents. I don't think it's ripping. Okay. Good opportunity for those bag holders to get out. Thanks, Travis. Ah. Conspiracy theory that Justin Trudeau being Fidel Castro's son. It's all right. It's not great. To Taiwan? I'll have to think about it. Ah, gross. Dude, cooking anything makes it carcinogenic. I don't think you need to sing your marijuana plant songs. Do you act ripping shorts bailing before the Fed announcement? I play Slipknot. Does your marijuana come out edgy after it's done? You make a video of you making egg fried rice. I could. Boiling food is safe. Not if you live in Flint, Michigan. Trash. I put some duck sauce on my egg roll. You're welcome. I heard plants were only into straight edge hardcore music. How's the mouth feel of duck sauce? Sticky. Sticky and cloyingly sweet. Oh, the egg roll's crispy. It's a damn good egg roll. This place has good egg rolls. That's why I eat there. It's got roast pork and cabbage. It's ironic that my favorite Chinese food probably isn't Chinese at all. It is hard to find good egg rolls. Rims and Tims, are you going to Manhattan or just all over the city? It's fine. It's just fucking greasy and sweet. I mean, how do you not go for $5 of extra chicken? You think a rate hike is priced in? Yeah. Ironically, I don't like authentic Chinese food all that much. Some stuff's delicious, but they're really just like way too big of a fan of that like unctuous gelatinous texture. I can't eat a plate of that. I didn't realize a Google search would tell me exactly what's priced into the market or not. It is a lot lighter. I agree. Not everyone who comes to New York gets mugged. Only people that look like they deserve it. I don't halitosis. Actually. What am I clipping? That'd be funny. Ah, come on. It's not like it's even desirable to mug people anymore. The only people with cash are tourists. It's in relation to its float size, Stefan. Like GameStop, if you go look at days where GameStop has 2 to 3 million volume, it behaves better. It's like a core workout too. When I visited New York, two hobos started a fist fight in the subway. Did they fuck each other afterwards? Because I would say that's pretty normal, but no, the water bottle, not mugging people. Mugging people doesn't require any effort at all. Thanks, Nugsy. That's too bad. Brett's a nice guy who makes artisanal hot dog tea from bridge runoff water. I didn't suggest anybody buy AMD weeklies. Who has AMD weeklies? What kind of fucking absolute degenerate would have so much faith in Lisa Su being the best tech CEO of our generation that they would buy AMD weeklies when the stock was surely going to decline another $4? I've heard you say day trading is bad because it provides liquidity and buy and hold is FUD. I'm convinced that you're convinced GME will not squeeze and we're stuck swing trading cycles. But day trading does provide liquidity and buy and hold is kind of funny. But low liquidity also means more ups. I mean, both are correct. Hi-Fi award tour. Buy and hold is fun and also fun. I think BBBY is the play for growing a small account. It's pretty good. There's a bunch of people obsessed with Ader. Probably do it there too. I think their IV is still pretty high. And you're like, oh no, Gurk, don't talk about that because then everyone will do it. No, they won't. They think I'm a big shill. It's perfect. The more I talk about it, the more likely they are to DRS their shares, which just provides more illiquidity, which provides more volatility. Taking risk off the table, one purple circle at a time. Should I save up the money to buy 100 shares of BBBY and start wheeling it on the cycles? You could. Why? I mean, don't start by just buying 100 shares. You could just sell CSPs. We're the volatility fund now. Now you're getting it, Pindlebot. Okay, so if GameStop has infinite potential liquidity, and you were doing that, or all of retail had done that up until now, you know, they would have like 3x'd their position at every bottom. which would just create a short squeeze, right? It just doesn't work that way. My understanding of the cycles is, I mean, just recently come to a point where we know basically everything that they're doing. And there's still loopholes. There's still ways out. So there's always going to be the risk that it may not come to fruition. You can sell them in the money. Yeah, they don't want to take the ways out that they have. I mean, because they make money on volatility. They'll never stop making risk-free money. Ever. And it's not a small amount of money. It's billions of dollars a year. I just think, you know, as holders of the stock and believers in the long-term potential of it, that we should, you know, get a cut of what Citadel's making. That's not too much to ask. Imagine how cheap securities would be if the Fed raises 20 basis points. I mean, then I'm just buying everything, right? And I can talk about all these things because all the hate watchers don't even know what the fuck I'm saying. They're like, what? FUD. That sounds bad. Well, no one's selling though, right? Mikas? I'm not selling. I'll sell covered calls. Right? I'll sell the IV spike. But I'm not going to sell my shares because I want to continue to tie up liquidity also. You pull back GME CCs yet? No, but soon. Planning on selling CSPs for BBY. Wait until after JPOW. I might do that before JPOW. I mean, I don't know. Do you want to collect premium or do you want to get assigned? Tinder XYZ. Get the fuck out of here. Going back to scalping crypto. Yeah, you keep the premium if your CSP gets assigned. There's no way we have less than 400 likes. No, we're at like 700 something. Ooh, what sort of spiciness is this, dork? You sending me no context charts now? I think we can run into the end of the week. That's why I'm pulling them back. Just FOMC minutes. Everything's chopping until they show up. Oh, they're elevated above the average. No, Turdferg is the king of no context charts. Requesting a New York accent from your mouth. Nah. What are the chances we rip post minutes? About the same as that we tank. Yeah, sure. Eventually. It could. I mean, there has to be diminishing returns to some extent, right? So every once in a while, they're going to have to short it down hard enough to create a new cycle. I think. %69% upvote. My random coin flip is tank today, rip tomorrow, and profit taking Friday. I think up today, rip tomorrow, profit taking Friday. Or up and after hours, right? See, if I had to guess, I would say after hour runs that spike IV by like 50% are really good for entering entropy swaps or finding counterparties, right? Because it looks very enticing the following day. I know you don't like an inverse Kramer strategy. I just don't care about it, honestly. How about letting your neighbor's cat pick stocks? I'll think about it. Are you saying GME specifically or market wide? GME specifically, but maybe both. How far in the money before you would consider a cashless exercise? I mean, 100x increase on the underlying stock, or a 100% increase on the underlying stock. Near the money May 27 CCs. Risky selling covered calls kind of during OPEX. $100x, take profits, don't come back. Do you expect VIX to steadily decline over the next month and a half? I mean, the VIXs should always be declining if the market's moving up. I don't think the market's going to move up for a month and a half. Doing all right, Aaron. How are you doing, man? Do you know the cat's name? I believe it's peanut butter jelly. Seven times 25 equals 175. According to my math, you're the cheapest thing for entertainment. I suggest an OnlyFans to generate more income. Noted. One single cat is named Peanut Butter Jelly. I'm pretty sure. I also think it's a jellicle cat. So there's a shitty pun in there as well. The X Jelly win. You can't do technical analysis on a volatility index. Did you just make a Cats the musical joke? I thought you were straight. Wait, did I? If I did, I'm not aware of it. Thoughts on YOLOing until my account has 5K? I think there's better ways to lose $95,000. Jellicle Cats are from the Cats musical. Really? I thought they were from Growl Tiger's Last Stand, which is the best children's book ever written, by the way. Jellicle cats aren't a breed, dog. Dog, I'm not a cat breeder. How the fuck would I know? Also, I love musicals. Just, I've never seen Cats. Growl Tiger's Last Stand is one of the poems that Cats is based off of? Really? Interesting. I've read Goodnight Moon. I actually have a copy of it here somewhere. I'll read it to you all at the end of the stream. Calls are green. J-Pow's gonna shaft me. J-Pow only fucks puts, so I think it'll be okay. Should shareholders worry there could be a move to take GameStop private? No. Same bot, different promoter. If we run anymore, Moonrun's gonna get assigned. Thought it really will be. Good night, Moon. Yes, Stefan. I think so. Do you think the whole surprise 75 basis point hike today narrative was floated to keep the 50 BP hike from tanking things? Maybe. Or just to get people to sell off a little bit. Matt Kors is freaking out right now. Do you buy puts on Tesla again? Should I wait to vote my proxy votes so that my votes will be on top when they count them? You could. Looks like it's slow squeezing to 400 again. I mean, it kind of is. Except it wouldn't be 400. It's going to be like 350 or 600. No, that's actually horseshit. Those are just fibs. They don't mean anything. I do. But if I say I hate something and then use it, it's really going to rile up Stefan. So it's worth it for me. The best part about being a pigeon whale is getting access to your private number that I can call day and night to hear your sultry voice. Doesn't look like you're a pigeon whale right now, Velvet Jupiter. Looks like I need to block someone's phone number. Shame. Brazilian steakhouse. C-mill. I wonder if I can do a stream only for pigeon whales and then read them Goodnight Moon. You know what? I'm going to do it. You went from explaining VWAP to explaining OPEX. I think that chat is collectively smarter for some reason. It's getting there. Do mods get access? I don't know. Do they? You're gonna get so many new pigeon whales. You know what I'm going to do? I'm just going to read one chapter of options as a strategic investment to the pigeon whales every week. Yeah, but that wouldn't be very capitalistic of me, would it, Trash Dan? Can you mod me on Discord and just give me the power to turn people's names brown? That'll give me, if I do one chapter a week, that should give me like 100 years of content. Dude, if you haven't made enough for a year of pigeon whales off of Pickles picks, I don't know what you're doing. It's like nobody even read the Campbell's soup thing. Wait, are you serious? Look, my VWAP? I lost it all gambling on options afterwards. I see. Yeah, at 10 p.m. every night, I read the pigeon whales to sleep with a chapter of options as a strategic investment. I'll just read until the chat dies. And then I'll quietly sign off. This is the perfect plan. I've wondered what to do for the pigeon whale tier for a while, and now I know. Snap went to 40. Snap did go to 40. It just didn't stay there. Duke of Waffles. Just start running ads and cash in on their slumber. Read trading volatility. Caterpillar is doing pretty good this week. HD printed the other day. What were the other pickles picks for this week? It's late enough in the week that we can talk about them in front of the pores, right? Baba did good initially. It's still okay. You know, I bought into UAL, but I haven't looked at the stock since. Yeah, UAL went up. It's up like $1. It hit 52. What was my price target on it? 54? It still looks good. Ascending triangle. Couple more days. Oh, spy calls Monday morning? When everyone thought the market was going to crash? I mean, come on. That was pretty good shit. I'm gonna go listen to this Pickles Picks FUD. Pickles Picks are a goddamn gold mine. Stock God. But J Smart would even upgrade for that. All my AMD calls are green. Are you proud, Dad? Now I will disappoint you by admitting I kind of believe the tinfoil hat theory that GME will release full NFT marketplace tomorrow because 5/5. If they do, it'll be because first overlapping FTD day. Are you playing spy options today? I'm gonna grab a straddle in about 15 minutes. I'm not putting any stops on it. FOMC straddles are the best. Because it goes up and down. I didn't buy any GME calls yet. I might pick up a few for tomorrow. I mean, generally, you just pick the one that profits, right? But if there's a lot of volatility, sometimes you just make money on both sides. I'm buying the straddle. See you again. Did you buy a GME call like a minute ago? No? Oh, I bought back the covered calls. I'm gonna straddle the SPY. You take profits on the winning leg first. The assumption is that the losing leg is simply a loss. What do you want, Moon? It's up to you, dude. Are you gonna get a 0 DT for your straddle? Yeah. Would you ever have a pickle con? No. That sounds shady. Or y'all gonna go there and dress up like pickles? That's all I can think of. I don't want to get assassinated. How come we never play night crawlers anymore? Fidelity won't let me open 0 GTs. Is straddling Friday calls a bad move? I mean, same like. You're paying a little more in premiums, but it's not gonna really, it doesn't really change anything. Moassinated? Everyone needs to chant Lisa Sue and pound their desks. Then I'll try to imagine it happening in unison all over the world. Do it now, before the breakout. Yeah, that was weird. Chat just died for a second. Everyone's anticipating. Oh shit. 1 second, guys. Sorry. We had to stop the run. I had to go do something real quick. Left the bidet running. Google A has voting rights. Google C doesn't. I believe Google A trades at a premium, like $20, something like that. So, I mean, unless you care about voting, then Google C is better. No, Larry, they aren't buying my CCs. They just want me to read them bedtime stories. No, my grill just got delivered. So I'm gonna fucking... I don't know. Doesn't really fit in my apartment anymore. JFresh got loose? Shit. Where is he? So you're telling me that the market's crashing, dork? Or that it's gonna bounce? Both look possible. Isn't chat making a mess of things? Oh, typical JFresh. Well, it depends on if I get that house in Long Island or not, right? Head and shoulders on the SPY. I mean, sorta. Is anybody just, like, full of nervous energy right now? In anticipation? We've only got 30 minutes. 30 minutes, make or break. What pellet grill do you get? Did you get? It's called like a pro line, something like that. Near term target for AMD. Well, let's take a look at it. I would say that a solid target would be up here at the EMA 60 at 105. If it breaks that, it can move up much higher very quickly. I've had soju. It's meh. Gives me a headache. I always get too drunk when I drink it too, because it's got like a weird alcohol content. Freg hasn't gone anywhere. It's like phonetic water torture. You ever throw decent money at options that cost cents for big potential gains? Like 400 0 DTE calls? Yeah, I've done that. Hmm. I mean, TA kind of matters, right? Because you can see which way they're positioning before the Fed announcement. Like AMD's looking pretty bullish. Nope, looking a little more bullish. That sucks, Luigi. Yeah, you can use trailing stops on a straddle. It lowers your position cost. Although spy straddles on announcements like this tend to be followed up with like a lot of, you know, like shorts getting out and then longs getting out. And so you get like something like this or like this, right? Where like you get a high and then a drastic low and then a bounce back to like mean. Because you get this massive volatility spike. And so sometimes you could just sell both. Advantages, disadvantages of shorter term options near the money versus far out of the money in terms of potential profits. I mean, shorter term options near the money suffer less theta decay than out of the money ones. The further out of the money it is, the faster theta decays. Also, the more you're able to capture small price movements, whereas, you know, predicting something is going to go out of the money or reach an out of the money price on like a near term call is risky. It also depends on how you're defining near the money versus out of the money. I mean, technically, near the money is still out of the money. There is at the money, in the money, and out of the money. Are you streaming AMC earnings? Why would I do that? What are some stocks that could gain a lot of value if JPOW is nice, and some stocks that could take a larger hit than others if JPOW decides to be strict for the first time in his life? All of them? To varying degrees. I'd imagine FANG stocks would see the most improvement in the short term. Oh, I feel the salt coma approaching. I think I only slept for like 3 hours last night, so that's part of it. In regards to Genie stock dividend, are there any macroeconomic factors, such as T-bills or bonds or other rates, that will incentivize brokers and primes to want to recall their shares? Yeah, because as macroeconomic factors change, so do lenders' risk models. They really don't want AMD to break out. No, they don't. How many dollars does the SPY swing on situations like this? I mean, it could move all the way up to like 420. Maybe even like 425. It can move pretty far, but I wouldn't take the risk on having anything besides at the money calls and puts. I don't know if they're trying to slam it. Thoughts on GME for May? Mostly unexciting. What a 418C, 416p? Just wondering. Okay. Doing buy 420, sell 2 422s. Okay. Probably next month. Towards the end of next month. Heavily. I mean, I might buy some to like tonight before market close, but like for the near term, but just a few. Stop asking me questions, Stefan. No more questions for you for the rest of today. Averaging down on BBY 60C Jan will help with not having to rely on massive volatility bump to the 30s, but instead of the 22, 25-ish range. So I have a couple $80 calls for Jan. I'm not really messing with them. But all the rest of my calls are at 40 or lower. I'm not a huge fan of like the 60 and 80s. I have a couple in case Ivy bumps massively, but other than that, yeah. Could it hit 80? I mean, it's possible. What do you mean, my opinion on them? I mean, I don't use them very often, but I don't use them because I don't really need the credit. Like if you don't have a lot of capital, they're useful. I use them occasionally. Like vertical spreads are fine. There's nothing wrong with them. Nice, Egan. I feel like I'm gonna fall asleep. This is gonna become the first ever Pickle Financial sleep stream. They can be useful. Yeah, I mean, they still carry risk. Some of them, quite a lot of it, especially debit spreads. What brokers are you most comfortable with for options trading? WeBull and IBKR. Markets try to bore everybody to death so their options expire worthless. It's a hell of a plan. I feel like the third time I've never fallen asleep on stream before. Have you already entered your straddle? No. I should right around now, though. Yeah. I was kind of hoping it would trade closer to 417 or 418. That doesn't look like the right price on those. Jesus, IV bumped a bunch. There we go. No, we got 13 minutes. AMD back in the oil business. AMD's in every business. Intel Inside was FUD. Sell CCs forever. What the fuck is mud water? I'm gonna go get some caffeine gum. I'll be right back. I don't watch YouTube. What's your ideal scenario post GME split if it doesn't kick off a squeeze? I already answered that question when you asked it the first time, Noah. Rich elite people like Gherk can get anything in gum form? Why is your name Low End Average Joe? I like it. Nice. One second. Okay, I'm back. How close are we all waiting to enter the stratos? I mean, IV only goes up, right? You forgot to mute Discord for that. Oh shit. Ah, whatever. Mix a little xanthan gum into my Americano every morning so I can chew it like a jelly pudding coffee. That's disgusting, kind of huge. Still chanting Lisa Sue and pounding my desk, but my hand hurts. Are we still going? Sure. I didn't toot. You guys will never know. You weren't listening on the Discord, so no one over there is going to tell you. Buying Jimmy calls for tomorrow if the Fed is bullish? Probably. You've never seen this? This happened at the last FOMC minutes, and the one before that, too. You suggest buying more than one zero? I did to dodge the fucking IV. I bought for May 20th, because the IV is just too high at the money. Or, like, for zero GTEs, rather. Bull had more votes than stream likes. What the fuck? We're about to go into the Fed minutes with less than 1,000 likes on the stream? Fuck, man. The market's gonna burn. People just aren't as bullish right now. Oh well. You're not debating me again. Too many pounding their CNS to Lisa Sue. Reasonable. I only wanted like button exposure for the 20 minutes surrounding the rate hike. Oh, I need to find the FOMC minutes website so I can see it when it comes out. No, I don't care if people in the Discord heard me. My neighbor is being loud as fuck right now. Throw that bunker bomb-sized water bottle at the wall. I think that's a war crime. Apparently, I did leave my mic unmuted. I don't know. What day do you get paid? Lawn care made easy. I need to move. Uh-oh. What's happening, Step Spy? We got the minutes 2 minutes early. This is suspicious. Which comes first, the bull trap or the... Everyone's getting trapped. But the question is it bull or bear first? Read the press release, you bitch. Central bank digital currency. They're not coming up. Now the puts print. $50 BPS priced in. Finally, we have decentralized currency. The ultimate dream for crypto. No, I'm bullish as fuck on this. Let's go active funds. Everything to the moon. I don't know where my JPOW pictures are. Quick, someone send me a JPOW picture so you can properly idolize him. I can't find the minutes. For some reason, they're not coming up on the FOMC website. Ooh, here's a statement. Phew. More inflation. Committee expects inflation to return to its 2% objective and the labor market to remain strong. Committee decided to raise the target range for federal funds rate to 0.75% to 1% and anticipates that ongoing increases in the target range will be appropriate. In addition, the committee decided to begin reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities on June 1st, as described in the plans for reducing the size of the Federal Reserve's balance sheet that were issued in conjunction with this statement. Okay. The committee will continue to, in assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. Do nothing. The committee would be prepared, sort of, to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessment will take into account a wide range of information, including readings on the public health, labor, and market conditions, inflation pressures and inflation expectations, and financial and international developments. Lies. Fed next month. We're shocked that doing nothing has done nothing, and we never could have expected nothing. Yeah. Inflation up, money still free. Let's fucking go. Alexis puts shaken, not stirred. Probably both parabolic. Was the news bullish or bearish? It sounded nothing-ish. That's exactly what it was. It was pigeon. The Fed's going full pigeon. It's like a shittier version of dovish. Dropping in to give the stream a like. Can't stay long, so fed me quick. The economy's going to hell in a handbasket. No one's stopping it. The SPY's not in free fall. It's just the bears picking up their puts. Really, I would argue that Jimmy very much gives a fuck about the SPY right now. It's actually underperforming it. That looks like free fall. Just wait. %9 inflation. 0.75% rate. Money's still free. Calm down. What if there are no bear or bull traps and everything's just a trap? What will RSS think of them raising the RRP rate? Oh, Jesus. Yeah, I use ADX. It's useless without DMI, but I use DMI. You want to use DMI plus minus with ADX. Ah. The struggle to... It's so hard to get out of billions of dollars worth of puts. It's so time consuming. This fucking absurd volume churn. No, it's not MOASS. No problem, Lead Farmer. Whoa. I need to wake the fuck up. Zom looking good too. India says they are exporting, and a lot of their crop got burnt up already. Nice. Wheat to the moon. Dude, you know what it is? It's the fucking, it's my allergy medication. It's just making me tired as fuck. Dude, I have like 6 different allergy medications I have to take. Believe me, Flonase is one of them. Ah. Bulls or Bears winning? No one knows. That's why it's so exciting. Brownies. What? Yeah, I've drank one of these every day since I bought this bottle. Do we want to listen to J-Pow speak? I think 1 gallon might actually be a good amount of water for you. Like, it's too much? I'm in. Yeah? Alright. We'll watch J-Pow speak. Is Scarf Lady gonna be there? No, that was just like an IMF convention fling. I think this is more than 1 gallon. It's like 1.6 gallons. You're diluting your body's salt too much. Did you see what I ate for lunch? Yesterday, a box of mac and cheese was $3. I rushed home and smashed the buy button on wheat. 12C for October. They're green today. Thank you, sir. No problem. Wait till bread's $10 a loaf. That's harsh, margin. If you drink too much water without peeing, you die. Why would I stop going pee? Yeah, I'm gonna stream the FOMC thing. I should set it up. 1 second. What an exciting time to be in the financial markets. I'm buying them for like late summer, fall. Alex. What's today's low? Okay. What do you mean, it's a straddle. Did you not straddle it? Did you go full bull? Give a rundown of the meeting. Continued quantitative tightening with a 0.25 bump, or yeah, 0.25 bump, because it was 5 to 7.5. Please be a bear trap. I mean, of course it's a bear trap. It's not really a bear trap, right? It's a bears trying to get out. I thought we were already at 0.5 to 0.75 from the March meeting. Oh, it was, yeah, 0.5 to 0.75, and we went from We went to 0.75 to 0.1 or 1. We were already at 0.5. And we went. It's a 0.25 increase. We were at 2.5 to 7.5? SPY 4:30 end of week. We'll see. The discount rate went up 50 BPS. The Fed fund rate went up 25. I was talking about the Fed fund rate. It's 0.75 to 1 now. I'd be 1,000-air if SPY end of days 4:30. I think the federal fund rate was already at 0.5 on the low end. Because this is the third hike. That doesn't even make sense. We went from 0.25 0 to 0.25, then 0.25 to 0.5, then 0.5 to 0.75, and then, right? Or is it just 0.5 to 1? Okay. So we were already at 0.25? I thought we were higher than that. I thought they announced a rate hike. Are you stroking out? A little bit. Oh, it was okay, so discount rate went from 0.5 to 1. Okay. I got it. So 0.5, so it's 0.5 on the discount rate and then 0.25 on the Fed fund rate. It's way too little too late. They should have been doing this last year. Also, it doesn't really have a real effect on any of the inflation we're experiencing. I feel like their best bet at reducing inflation right now is just push forward a recession so they can reduce demand. Mortgage rates are about to go up another 100%. I hope you sold your house at the top. Nope, just gonna own it for like 30 years. That's a way of doing it. Well, the Dow's happy. Cat to the moon. Yeah, the SPY's gonna recover too. Pickle spreads are only available on the OnlyFans. Man, that caffeine is not kicking in. Wait, there's an OnlyFans? Hmm. J-Pow talking? Oh, is it time?
Ongoing increases in the target rate for the federal funds rate will be appropriate. In addition, we are beginning the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. After expanding at a robust 5.5% pace last year, overall economic activity edged down in the first quarter. Underlying momentum remains strong, however, as the decline largely reflected swings in inventories and net exports, two volatile categories whose movements last quarter likely carry little signal for future growth. Indeed, household spending and business fixed investment continued to expand briskly. The labor market has continued to strengthen and is extremely tight. Over the first 3 months of the year, employment rose by nearly 1.7 million jobs. In March, the unemployment rate hit a post-pandemic and near 5-decade low of 3.6%. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. Employers are having difficulties filling job openings, and wages are rising at the fastest pace in many years. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 6.6%. Excluding the volatile food and energy categories, core PCE prices rose 5.2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. Disruptions to supply have been larger and longer lasting than anticipated, and price pressures have spread to a broader range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions as well. Russia's invasion of Ukraine is causing tremendous loss and hardship, and our thoughts and sympathies are with the people of Ukraine. Our job is to consider the implications for the U.S. economy, which remain highly uncertain. In addition to the effects on inflation, the invasion and related events are likely to restrain economic activity abroad and further disrupt supply chains, creating spillovers to the U.S. economy through trade and other channels. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to restoring price stability. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by a 0.5 percentage point and stated that it anticipates that ongoing increases in the target range will be appropriate. We also decided to begin the process of reducing the size of our balance sheet, which will play an important role in firming the stance of monetary policy. We are on a path to move our policy rate expeditiously to more normal levels, assuming that economic and financial conditions evolve in line with expectations. There is a broad sense on the committee that additional 50 basis point increases should be on the table at the next couple of meetings. We'll make our decisions meeting by meeting as we learn from incoming data and the evolving outlook for the economy. And we will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal. With regard to our balance sheet, we also issued our specific plans for reducing our securities holdings. Consistent with the principles we issued in January, we intend to significantly reduce the size of our balance sheet over time in a predictable manner by allowing the principal payments from our securities holdings to roll off the balance sheet, up to monthly cap amounts. For Treasury securities, the cap will be $30 billion per month for 3 months and will then increase to $60 billion per month. The decline in holdings of Treasury securities under this monthly cap will include Treasury coupon securities, and to the extent that coupon securities are less than the monthly cap, Treasury bills. For agency mortgage-backed securities, the cap will be $17.5 billion per month for 3 months and will then increase to $35 billion per month. At the current level of mortgage rates, the actual pace of agency MBS runoff would likely be less than this monthly cap
Wendy's
amount.
coupons.
Our balance sheet decisions are guided by our maximum employment and price stability goals, and in that regard, we'll be prepared to adjust any of the details of our approach in light of economic and financial developments. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks. The committee is determined to take the measures necessary to restore price stability. The American economy is very strong and well-positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
We're gonna belong to China.
Nick Cimarosa of the Wall Street Journal. Chair Powell, the unemployment rate at 3.6% in March is now essentially at the level that the committee had expected would prevail over the next 3 years, and at the bottom end of FOMC participants' projections for the longer run rate that you submitted in the projections at the last meeting. How has your outlook for further declines in the unemployment rate changed since March? What does this imply for your inflation forecast? And how has your level of confidence changed with regard to the feasibility of slowing hiring without pushing the economy into recession? Thanks.
Thank you. So you're right, 3.6% unemployment is just about as low as it's been in 50 years. And I would say that I expect, and committee members generally expect, that we'll get some additional participation. So people will be coming back into the labor force. We've seen that, particularly among prime age people. And that will, of course, tend to hold the unemployment rate up a little bit. I would also expect, though, that job creation will slow. Job creation has been at more than 500,000 per month in recent months. Very, very strong, particularly for this stage
waste management
of the economy.
merger?
And so we think with fiscal
Last
policy
hope
less
to
supportive,
save
with
the
monetary policy
economy.
less supportive, we think that job creation
Stop
will slow
pushing your
as well.
Dan
So
agenda.
it is certainly possible that the unemployment would go down further. So I would expect those to be relatively limited because of the additional supply and also just the slowing in job creation. Implications for inflation, really the wages matter a fair amount for companies, particularly in the service sector. Wages are running high, the highest they've run in quite some time. And they are one good example of, or good illustration really, of how tight the labor market really is. The fact that wages are running at the highest level in many decades. And that's because of an imbalance between supply and demand in the labor market. So we think through our policies, through further healing in the labor market, higher rates, for example, of vacancy filling and things like that, and more people coming back in, we like to think that supply and demand will come back into balance and that therefore wage inflation will moderate to still high levels of wage increases, but ones that are more consistent with 2% inflation. That's our expectation. Your third question was?
Your level of confidence that you can slow hiring without pushing the economy into a downturn.
So I guess I would say it this way. There's a path. There's a path by which we would be able to have demand moderate in the labor market and therefore have vacancies come down without unemployment going up, because vacancies are at such an extraordinarily high level. They're 1.9 vacancies for every unemployed person, 11.5 million vacancies, 6 million unemployed people. So, and we haven't been in that place on the vacancy, sort of the vacancy unemployed curve, the Beveridge curve. We haven't been at that sort of level of a ratio in the modern era. So in principle, it seems as though by moderating demand, we could see vacancies come down, and as a result, and they could come down fairly significantly, and I think put supply and demand at least closer together than they are, and that would give us a chance to have get inflation down, get wages down, and then get inflation down without having to slow the economy and have a recession and have unemployment rise materially. So there's a path to that. Now, I would say I think we have a good chance.
Can you crop the face
to,
off the
to have a
image
soft
and put the
or
suit on
softish
him?
landing
No?
or outcome, if you will.
I don't even know how
I'll
to
give you
do
a couple
that.
reasons for that. One is households and businesses are in very strong financial shape. You're looking at, excess savings on balance sheets, excess in the
Where's
sense that
Girk's
they're
Coke
substantially
guy?
larger than
Seriously?
the prior trend. Businesses are in good financial shape. The labor market is, as I mentioned, very, very strong. And so it doesn't seem to be anywhere close to a downturn. Therefore, the economy is strong and is well positioned to handle tighter monetary policy. So, but I'll say, I do expect that this will be very challenging. It's not going to be easy. And it may well depend, of course, on events that are not under our control. But our job is to use our tools to try to achieve that outcome, and that's what we're going to do.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You talked about using 50 basis point rate hikes or the possibility of them in coming meetings. Might there be something larger than 50? Is 75 or a percentage
Because
point
raising rates
possible?
doesn't have an effect on the
perhaps you could
inflation
walk
we're
us through your
experiencing.
calibration. Why 1 month should we, or one meeting should we expect at 50? Why something bigger? Why something smaller? What is the reasoning for the level of the amount of tightening? Thank you.
Sure. So 75 basis point in an increase is not something the committee is actively considering. What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings. So we're going to make those decisions at the meetings, of course, and we'll be paying close attention to the incoming data and the evolving outlook, as well as to financial conditions. And finally, of course, we will be communicating to the public about what our expectations will be as they evolve. So the test is really just, as I laid it out, economic and financial conditions evolving broadly in line with expectations. And, I think expectations are that we'll start to see
fucking love
inflation
straddles. Every time this guy
flattening out.
talks, man.
Not necessarily declining yet, but we'll see more evidence. We've seen some evidence that the core PCE inflation is perhaps either reaching a peak or flattening out. We'll want to know more than just some evidence. We'll want to really feel like we're making some progress there. But I mean, we're going to make these decisions, and there'll be a lot more information. I just think we want to see that information as we get there. It's a very difficult environment to try to give forward guidance 60, 90 days in advance. There are just so many things that can happen in the economy and around the world. So, we're leaving ourselves room to look at the data and make a decision as we get there.
I'm sorry, but if inflation is lower 1 month and the unemployment rate higher, would that be something that we would calibrate towards a lower increase in the funds rate, or
I don't think a 1 month. 1 month is not no. 1 month's reading doesn't tell us much. We'd want to see evidence that inflation is moving in a direction that gives us more comfort. As I said, we've got 2 months now where core inflation is a little lower, but we're not looking at that as a reason to take some comfort. I think we need to really see that our expectation is being fulfilled, that inflation, in fact, is under control and starting to come down. But it's not like we would stop. We would just go back to 25 basis point increases. It'll be a judgment call when these meetings arrive. But our expectation is, if we see what we expect to see, then we would have 50 basis point increases on the table at the next 2 meetings.
Thanks. Let's go to Colby.
Thank you. Colby Smith from the Financial Times. Given the expectation that inflation will remain well above the Fed's target at year end, what constitutes a neutral policy setting in terms of the Fed funds rate? And to what extent is it appropriate for policy to move beyond that level at some point this year?
So, neutral. When we talk about the neutral rate, we're really talking about the rate that neither pushes economic activity higher nor slows it down. So it's a concept, really.
This is awesome.
It's not something we can identify with any precision.
Bulls.
So we estimate it within broad bands of uncertainty, and the current estimates on the committee are sort of 2 to 3%. And also, that's a longer run estimate. That's an estimate for an economy that's at full employment and 2% inflation. So really what we're doing is we're raising rates expeditiously to what we see as the broad range of plausible levels of neutral. But we know that there's not a bright line drawn on the road that tells us when we get there. So we're going to be looking at financial conditions, right? Our policy affects financial conditions, and financial conditions affect the economy. So we're going to be looking at the effect of our policy moves on financial conditions. Are they tightening appropriately? And then we're going to be looking at the effects on the economy. And we're going to be making a judgment about whether we've done enough to get us on a path to restore price stability. It's that. So if that path happens to evolve levels that are higher than estimates of neutral, then we will not hesitate to go to those levels. We won't. But again, there's a sort of false precision in the discussion that we as policymakers don't really feel. You know, you're going to raise rates, and you're going to be kind of inquiring how that is affecting the economy through financial conditions.
I know, Space Monkey.
And
I
of
have
course,
positions on
if
both.
higher rates are required, then we won't hesitate to deliver them.
Neil?
What's your
Thanks,
PC
Chair
for
Powell.
this
Neil Erwin,
guy?
Axios.
I
Do
mean,
you
I already
see
have
evidence that
trailing
inflationary
stop.
psychology is changing, that in areas like workers' wage demands, businesses willing
But
to
maybe like
raise prices?
425,
Do you
60?
see evidence that there is a psychological shift going on inflation? Thanks.
So we don't really see strong evidence of that yet, but that does not in any way make us comfortable. I think if you look at short-term inflation expectations, they're quite elevated. And you can look at that and say, well, that's because people expect inflation to come down. And in fact, inflation expectations come down fairly sharply.
I mean, in a
Longer-term
strangle,
inflation
you want the stock to
expectations
trade sideways.
have been reasonably stable, but have moved up but only to levels where they were in 2014 by some measures. So you can look at that, and I think that's a fair description of the picture. But it's really about the risks. We don't see a wage price spiral. We see that companies have the ability to raise prices, and they're doing that, but there have been price shocks. So I just think it takes you back to the basic point, was that we know we need to expeditiously move our policy rate up to ranges of more normal, neutral levels, and we need to look around and keep going if we don't see that financial conditions have tightened adequately, or that the economy is behaving in ways that suggest that we're not where we need to be. So you don't see those things yet, but I would say there's no basis for feeling comfortable about that. It's a risk that we simply can't. We can't run that risk. We can't allow a wage price spiral to happen, and we can't allow inflation expectations to become unanchored. It's just something that we can't allow to happen, and so we'll look at it that way.
Gina?
Great, thanks, Chair Powell. Gina Smilik with the New York Times. You mentioned in the statement both the upside risks to inflation from Russia and China. Obviously, those are very much supply shocks rather than demand side. And I wonder what you meant to convey by adding them. I wonder what you meant to convey by adding those.
Well, so our tools don't really work on supply shocks. Our tools work on demand. And to the extent we can't affect really oil prices or other commodity prices or food prices and things like that. So we can't affect those. But there's a job to do on demand. And that you can see that in the labor market, where demand is substantially in excess of supply of workers. And you can see it in the product markets as well. But I guess I'm just pointing out that a couple of things. For both the situation in Ukraine and the situation in China, they're likely to both add to headline inflation, and people are going to be suffering from that. You know, people almost suffer more from food and energy shocks but even though they don't actually tell us much about the future path. So, but the second thing is that they're both capable of preventing further progress in supply chains healing, and so, or even making supply chains temporarily worse. So they're going to weigh on the process of global supply chain healing, which is going to affect broader inflation too. So in a way, they're two further negative shocks that have hit really in the last, 60 days.
You guys stop being a bunch of fucking perverts.
Victoria?
Hi, Victoria Guida from Politico. I want to follow up on that because you all have obviously highlighted that there are both supply and demand issues at play in inflation. And I'm just wondering, if these supply chain issues continue because of Russia, because of China, or just because these things take a while to work out, does getting back down to your 2% mandate require that these supply chain issues get resolved since you can only handle the demand side, as you said, or will you have to crimp demand maybe even further if the supply chain issues don't resolve themselves in order to try and get inflation back down to where you want it to be?
So, I'll just say for now, we're focused on doing the job.
Look at the money printer just firing off.
There. Again,
Thanks,
if you look at it, it's
Caterpillar.
essentially almost 2-to-1 job vacancies
my
to
cat shirt?
unemployed people. There's a lot of excess demand there.
Who's the CEO
more than
of
5
Caterpillar?
million more
I need to add them to the
employed
list.
plus job openings than there are the size of the labor force. So there's an imbalance there that we have to do our work on. It's a very difficult situation if you can't, you would look at core inflation, which wouldn't include the commodity price shocks, and that's one of the reasons we would tend to focus on that because we can have more of an effect on that. But it would be a very difficult situation. We have to be sure that inflation expectations remain anchored, and that's part of our job too. So we'd be watching that carefully, and it puts any central bank in a very difficult situation.
Why are these stocks so good to us?
Howard Schneider with Reuters, and thanks, and nice to be back. Two questions.
Jim Bob,
quick one.
ETF looking
You cited the
strong as
1.9 to
fuck
1
right
figure
now.
so often now. I got to ask you, what would be a good figure there? What would you like to see that come down to think that you're at sort of a non-inflationary vacancy to unemployed rate? And secondly, on help from inflation, how much are you counting on wealth effects through stock market channels? Equity markets broadly down quite a bit since late fall, first of the year. How are you mapping that into household consumption?
If this guy hits
Have they
88
come
miles
down
an
enough?
hour, he's
Do
going to
you
disappear.
need another leg down in equity values to think that households are going to stop spending at the rate you need them to stop spending?
Kind of looks like John Lithgow.
Okay, so in terms of the vacancies to unemployment ratio, we don't have a goal in mind. There's no specific number that we're saying we got to get to that. It's really you've got to get to a place where the labor market appears to be more in balance, and that depends not only on the level of those things. It depends on how well the matching function in the labor markets are working. Because the longer these expansions go on, you can get very efficient with all of that, and the beverage curve shifts out, and that also tends to help. So there isn't a specific number. I will say we were at I think when we got to 1-to-1 in the late teens, we thought that was a pretty good number. But again, we're not shooting for any particular number. What we'd like to see is progress, but we're not really looking at that. That's an intermediate variable. We're looking at wages and we're looking at ultimately inflation. So there are a bunch of channels through which policy works. You can think of it as interest-sensitive spending, and then you can think of another big one as asset values broadly. And there are big models with a lot of different channels that are related to that. We don't focus on any one market, the equity market or the housing market, or we focus on financial conditions broadly. So we wouldn't be targeting any one market, as you suggest, for going up or down, or taking a view on whether it's at a good level or a bad level. We just would be looking at very broad measures of financial conditions, all the different financial conditions indexes, for example, which include equity, but they also include debt and many other things, credit spreads, things like that too.
Rachel.
Is he saying buy credit spreads?
Hi, Chair Powell. Rachel Siegel here from the Washington Post. To follow up from your message from the very beginning, what is your message to the American people about when they will start to feel the effects of, say, a 50 basis point rate hikes or multiple hikes? How do you explain to them what that does to their grocery bill or their rent or their gas bill? Thank you.
Get fucked, Spigo Bird. Say it.
The first thing to say is that we understand, and some of us are old enough to have lived through high inflation, and many aren't, but it's very unpleasant. It's just something people don't, when they experience it for the first time. You're paying more for the same thing. If you're a normal economic person, then you're probably don't have that much extra to spend, and it's immediately hitting your spending on groceries, on gasoline, on energy and things like that. So we understand the pain involved. So how do you get out of that? And it's our job to make sure that inflation of that unpleasant high nature doesn't get entrenched in the economy. That's what we're here for. One of the main things we're here for. Perhaps the most fundamental thing we're here for. And the way we do that is we try to get supply and demand back in sync with each other, out of imbalance.
Some of us have had to be exorbitantly rich
so that
through inflation.
the economy is under less stress and inflation will go down. Now, the process of getting there involves higher rates. So higher mortgage rates, higher borrowing rates, and things like that. So it's not going to be pleasant either. But in the end, everyone is better off. Everyone, particularly people on fixed incomes and at the lower part of the income distribution, are better off with stable prices. And so we need to do everything we can to restore stable prices. We'll do it as quickly and effectively as we can. We think we have a good chance to do it without a significant increase in unemployment or really sharp slowdown. But ultimately, we think about the medium and longer term, and everyone will be better off if we can get this job done. The sooner, the better.
Thank you, Edward.
Thank you, Chair Powell. Edward Lawrence with the Fox Business Network. So you've talked in the past about consumer spending and how that's drives the economy. Are you concerned with this high level of inflation that the consumer will stop spending, pushing us into, and what's the level of your concern, pushing us into a recession?
So the economy is doing fairly well.
I have all kinds of positions.
We expect growth to be solid this year, and we see household spending and business investment as fairly strong, even in the first quarter, which was relatively slow on some other fronts. So, and the labor market. If you look at the labor market, for people who are out of work and looking, there are lots of job opportunities. For wages are moving up at rates that haven't been seen in quite a long time. So it's a good time to be a worker looking to
inflation expensive. Yes,
either change jobs or get a wage increase in your current job. So it's a strong economy, and nothing about it suggests that it's close to or vulnerable to a recession. Now, of course, given events around the world and fading fiscal policy effects and higher rates, you could see some slower economic activity. Certainly it will not be. Last year was an extraordinarily strong growth year as we recovered from the pandemic. As I mentioned, growth over 5%. But most forecasters have growth this year at a solid pace, above 2%.
But we've talked with economists.
Yeah, I have a straddle.
Democrats and Republican presidents who both said that that the Fed is so far behind the curve on inflation that a recession is inevitable.
So, and as I said, I think we have a good chance to restore price stability without a recession, without a severe downturn, and without materially higher unemployment. And I mentioned the reasons for that. So I see a strong economy now. I see a very strong labor market, for example. Businesses can't find the people to hire. They can't find them. So typically in a recession, you would have unemployment. Now you have surplus demand. So there should be room, in principle, to reduce that surplus demand without putting people out of work. The issue will come that we don't have precision surgical tools. We have essentially interest rates, the balance sheet, and forward guidance, and they're famously blunt tools. They're not capable of surgical precision. So I would agree. No one thinks this will be easy. No one thinks it's straightforward, but there's certainly a plausible path to this, and I do think we've got a good chance to do that. And our job is not to rate the chances. It is to try to achieve it. So that's what we're doing. There are a range of opinions, though, and that's only appropriate.
Steve Dorsey.
Thanks, Steve Dorsey, CBS. You mentioned earlier just now fading fiscal policy. Do you feel that the Fed has been supported enough from policies at the White House and in Congress in combating inflation?
It's really the Fed that has responsibility for price stability, and we take whatever arrives at the Fed in terms of fiscal activity. We take it as a given. We don't evaluate it. We don't. It's not our job, really. We don't have an oversight function there.
We might hit 125 by
we
end
look
of
at it
day.
as our job given all the factors that are happening, to try to sustain maximum employment and price stability. So, if if the Congress or the administration has ways to help with inflation, I would encourage that, but I'm not going to get into making recommendations or anything like that. It's really not our role. We need to stay in our lane and do our job. When we get inflation back under control, then maybe I can, give other people advice. Right now, we need to focus on, just focus on doing our job, and I'll stick to that, stick in our lane.
Steve Matthews.
Are we going back to Wyckoff? Maybe.
Steve
Will be
Matthews
passed
with
that everyone
Bloomberg
needs
News.
to have a child. We need
A number of your
never-ending
colleagues
growth.
have said that the rates will need to go above neutral into a restrictive territory to bring down inflation. One, do you agree with that? And two, you recently spoke in great praise of Paul Volcker, who had the courage to bring inflation down with recessions in the 1980s. And while it's certainly not your desire, and the soft landing is the big hope of everyone, would this FOMC have the courage to endure recessions to bring inflation down if that were the only way necessary?
So I think it's certainly possible that we'll need to move policy to levels that we see as restrictive as opposed to just neutral. We can't know that today. That decision's not in front of us today. If we do conclude that we need to do that, then we won't hesitate to do it. I'll say again, there's no bright
Did we
line
get assigned?
that you're
Not
stepping
yet.
over. You're really looking at what our policy stance is and what the market is forecasting for it. You're looking at financial conditions and how that's affecting the economy and making a judgment. We won't be arguing about whose model of the neutral rate is better
From
than the
pigeon
other
to
one.
hawk,
It's
a
much more
glimpse of
about
the future.
practical application of our policy tools. And we're absolutely prepared to do that. Wouldn't hesitate if that's what is taken. So I am, of course, who isn't an admirer of Paul Volcker? I shouldn't be singled out in this respect, but I knew him just a little bit and have tremendous admiration for him. And but I would phrase it this way. He had the courage to do what he thought was the right thing. That's what it was. It wasn't a particular thing. It was that he always did what he thought was the right thing. If you read his last autobiography, that really comes through. So that's the test. It isn't will we do one particular thing. I would say we see restoring price stability as absolutely essential for the country in coming years. Without price stability, the economy doesn't work for anybody, really. And so it's really essential, particularly for the
Volcker
labor
let me
market.
touch
If you
his
think about it,
earlobes in a
if you look at the
Shake
last
Shack.
cycle, we had a very,
Good for
very
you, man.
longest expansion cycle in our recorded history. And in the last 2-3 years, you had the benefits of this tight labor market going to people in the lower quartiles, and it was, racial wealth and income, not wealth, but income gaps were coming down, wage gaps. So it's a really great thing. We'd all love to get back to that place, but to get back to anything like that place, you need price stability. So we've been hit by historically large inflationary shocks since the pandemic. This isn't anything like regular business. This is, we have a pandemic, we have the highest unemployment, since the Depression. Then we have this outsized response from fiscal policy and monetary policy. Then we have inflation. Then we have a war in Ukraine, which is cutting the commodity, patch in half. And now we have these shutdowns in China. So it's been a series of inflationary shocks that are really different from anything people have seen in 40 years. So we have to look through that and look at the economy that's coming out the other side. And we need to somehow find price stability out of this. And it's obviously going to be very challenging, I think, because you do have, numerous supply shocks, which are famously difficult to deal with. So I guess that's how I think about it.
Hey, Chris. Rugaber.
Thank you. Chris Rugaber at Associated Press. Earlier, you just said that if necessary, I think were the words, that you would, or if it turned out to be necessary, or you said it's possible that we'll need to move policy to restrictive levels. Given where inflation is and the hot economy is, or certainly the hot labor market as you described it, why still the hesitation? I mean, shouldn't it be, what else do you need to see in order to determine that? Wouldn't the Fed naturally be looking to go to a restrictive level at this point? Thank you.
So if I said necessary, I meant to say appropriate. We're not going to be erecting a high barrier for this. It's more if we think it's appropriate. The point is we're a very long way from neutral now. We're moving there expeditiously, and we'll continue to do so. And we can't make that decision really today. The decision about how high to go will be on
I think I figured out
the
how to
table
adjust
to be
the
made
bottom of my
when we
seats
reach neutral.
to a point where it's actually
and,
comfortable.
I expect we'll get there.
And that makes me
expeditiously, as I
sleepy.
mentioned. So it's not that we don't want to making that decision today wouldn't really mean anything.
It's a way better
But I'll say
explanation
again,
than new medication.
if we do believe that it's appropriate to go to those levels, we won't hesitate.
Mike McKee from Bloomberg Television and Radio. The balance sheet, why did you decide to wait until June 1st to begin letting
I think
securities
AMD's about to
roll
break
off
through
and
97.
not immediately start in the middle of this month, say? And do you have another, a newer or a better estimate for the monetary policy impact
Home Depot just hit
of letting
312.
the balance sheet decline? And then finally, I'm just curious why you felt the need to address the American people at the top of your remarks. Are you concerned about Fed credibility with the American people?
So why June 1? It was just pick a date, and that happened to be the date that we picked. It was nothing magic about it. It's not going to have any macroeconomic significance over time. We just picked that. Sometimes we publish these calendars on the first day of the month, and that's what we're doing. I wouldn't read anything into it. In terms of the effect, I would just stress how uncertain the effect is of shrinking the balance sheet. We run these models, and everyone does in this field, and make estimates of what will be the how do you measure, a certain quantum of balance sheet shrinkage compared to quantitative easing. And, these are very uncertain. I really can't be any clearer. There won't be any clearer. People estimate that broadly on the path we're on, and this will be taken probably too seriously, but sort of 1/4%, one rate increase over the course of a year at this pace. But I would just say with very wide uncertainty bands, very wide. We don't really know. There are other estimates that are much smaller than that, by the way. Some of you may have read about that. That's kind of a mainstream
J-Pow, father
estimate.
of the bulls.
We know that that it is part of returning to more normal, more neutral financial conditions. And our strategy is to set up a plan and have it.
He has
have
no
it operate,
economic education. He's a lawyer.
And really have have the interest rate be the active tool of monetary
I
policy.
see Sherwin.
In terms of
Believe
speaking
me.
to the American people, I feel like sometimes I want to remind us.
Yeah, you
really,
can throw a dart,
that
everything's
that's who we
green,
work
but
for, and that
the
it's
things I
it's
picked are
inflation
more
that
green.
People are feeling all over the country, and it's very important that they know that we know how painful it is, and that we are working hard on fixing it. I
Cat
thought it
up
was quite important to do
$6,
that.
HD up
And
8.
So that was really the thinking behind that.
DDS up 11. If
Do
only
you
there
do you
were
think the Fed
options.
has a credibility problem?
No, I don't. And a good example
Thanks,
of
Pickle,
why would
Lisa,
be
J-Pow.
that. So, in the fourth
AMD
quarter
under
of last year,
100,
as we
same
started
like
talking
free.
about tapering sooner and then raising rates this year, you saw financial markets reacting, very appropriately. Not to bless any particular day's measure, but the way financial markets, the forward rate curve has tightened in response to our guidance and our actions, really amplifies
And thank you for
policy.
teaching me this stuff. Now I have the skills to be able to capitalize on events like
monetary
this. Like
policy is
J-Pow
working
speaking.
through expectations
Teach a
now
man
to
to
a very
fish,
large
et cetera.
extent. We've only
You're
done
the
2
bat.
rate increases, but if you look
Thanks,
at
existential.
financial conditions,
You're the best
the
too,
2
man.
years, the 2 years at 280 now. In September, I think it was at 20 basis points, and that's all through the economy. People are feeling those higher rates already, and that shows that the markets think that our
My
forward guidance
zero
is credible.
DTs got
And
stopped
I
out.
think that's we want to keep.
But
it
I
that
still
way.
have my leaps.
Scott Horsley, did you have your hand up? Okay. Brian, Chung.
Hi there, Brian Chung with Yahoo
You can't win
Finance.
'em all,
To expand
Ryan.
on Steve's question about Paul Volcker, there was also a great pain that came with that as well. Higher interest rates obviously affecting households and businesses, and wondering how you kind of square what might be demand destruction? Are you already seeing that? Is the idea here to
Teach a man to fish, and
incentivize
he will flop
a
in
lack
the
of spending,
sun.
to decrease consumption, to perhaps
Yeah, I still
table
expect
business
FTDs for
investments?
Jamie
Is
tomorrow.
that essentially what's
Especially if the
happening through
market
this
keeps moving up, they should have a
Well,
good effect.
so as I mentioned, you can see
Answer you
places
what?
where
What are you
where
asking?
demand is substantially in excess of supply, and what you're seeing as a result of that is prices going up and at unsustainable levels that are not consistent with 2% inflation. And so what our tools do is that as we raise interest rates, demand moderates and it moves down. Interest rates, businesses will invest a little bit less, consumers will spend a little bit less. That's how it works. But ultimately, getting supply and demand back in balance is what gives us 2% inflation, which is what gives the economy a footing where people can lead successful economic lives and not worry about inflation. I mean, so yes, there may be some pain associated with getting back to that, but the big pain is in not dealing over time, is in not dealing with inflation and allowing it to become entrenched.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could take a step back and talk about, in March, the dot plot had steady, looked like steady quarter-point rate hikes, get the funds rate up to 2%.
I'm start breaking 93.
Now, it seems like you're much more aggressive. So could you talk about the thinking that's behind that? Thank you.
So, look, I think what you've seen is really, I would say, last fall, in the middle of last fall, there was a time when our policy stance was still pretty much in sync with what the data were saying. If you remember, there were a couple of weak jobs reports, and inflation had actually come, month by month inflation had come down till September, a few months in a row, stayed low. And then around the end of October, we got three or four really strong readings that just said, no, this is a much stronger economy. And by the way, then with the restatement of the jobs numbers, it looked like the job market was much more even and stronger in the second half of the year, but that hadn't happened yet. Anyway, we got an ECI reading, Employment Compensation Index reading, the Friday before the November meeting. Then we got a really strong jobs report. Then we got a really high CPI report. And so I think it became clear to the committee that we needed to adjust and adapt. And we have. Ever since then, we've been adapting.
Dude, my Netflix 205s are going to print.
The committee moved by the time of the December meeting.
I thought they were dead forever.
3 rate increases, then to a meeting of 7 rate increases at the March meeting. And that process is going on. And it's clearly continuing. And that's why I say, and I actually mentioned this at the March meeting, that no one should look at any single SEP as sort of a real resting place for 90 days, because we're in a fast evolving situation. And that's what's happened. You can see unanimous vote today, of course, and I told you the guidance that broad support on the committee to have 50 basis point hikes on the table at the next couple of meetings. So you're right, and by the way, other forecasters have been doing the same thing, and it's just us adapting to the data and to the situation and using our tools to deal with it.
Thanks. We'll go to Nancy for the last question.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, I want to ask how you're able to balance your dual mandate, stable prices and maximum employment, especially when the unemployment rate for black workers is still roughly twice the rate for white workers.
So unemployment rates for all racial groups have come down a lot and are now much closer to where they were before the pandemic hit. So so that's one thing I would say, and that's important. But the bigger point is this: I do not at this time see the two sides of the mandate as in tension. I don't, because you can see that the labor market is out of balance. You can see that there's a labor shortage. There aren't enough people to fill these job openings, and companies can't hire, and wages are moving up at levels that would not over time be consistent with 2% inflation over time.
It's the spy
and of course,
racist.
Everyone wants to see wages go up, and it's a
Probably.
great thing, but you want them to go up at a sustainable level, because these wages are to some extent being eaten up by inflation. So what that really means is to get the kind of labor market we really want to get, we really want to have a labor market that serves all Americans, especially the people in the lower income part of the distribution, especially them. To do that, you've got to have price stability.
Breaking,
and we've got to get back to price stability so that we can have a labor market where people's wages aren't being eaten up by inflation, and where we can have a long expansion too. That's the good thing, is you can have, as we've had several of the longest expansions in U.S. history have been in the last 40 years, and that's because it's been a time of low inflation. And long expansions are good for people.
Yep,
and good
higher
for the labor
high on
market.
GME.
So that's the way I think about it. I think we, our tools work. We have to think in the medium and longer term, and I do think that the best thing for everyone is for us to get back to price stability to support really a sustained period of strong labor market conditions. Thanks very much.
Set a stop here. All right, that was cool. Kind of boring, but it's always nice to hear Powell get spicy. GME moving up to 125. Say more money coming back into value stocks right now than we're seeing pump into growth. Like BTU up 4%. X went from negative on the day to up 1%. HD up at 313. Yeah, Caterpillar up fucking 3%. Facebook's up almost 4%, which is interesting. Netflix up 0.8. Sell, cash out. Bear rally next 1 to 2 weeks. Probably. I don't know about that, Sistani. I think we'll have a couple days of continued upward price movement. Question is, AMD going to break 100? That would be very good for my $90 leaps. I really don't want to get rid of them sub 100. But at 100, I'd probably shave off a few. I think I'm definitely gonna hold on to Caterpillar. I think it looks pretty fucking good for a move back towards, like 127. This should be a strong bounce. I mean, it resisted the downturn in the market very, very well over the last few days. And most of this, like this big drop, was just a sell-off after the test at 240. So I think we'll start to see a slow climb back up to that resistance now. Even probably consider entering some as long as it continues to perform overnight. Visa already moving back towards 212. Next target's 216. Home Depot looks like it's going to break the 1314 resistance, or 314 resistance, 1380. Next target for Home Depot at 323. There is a little bit of resistance here at 318, however, which for some reason I don't have on this chart, but it's there. Netflix trying to break to the upside of 200. I don't know if it will or not. That's a little shakier. I think AMD will continue to perform well into tomorrow. GME. Kind of taking a break. CNS wrapped up already, right? So yeah, probably not a lot of active fund well, not a lot of effect from active funds after this point, right? So now we no longer have it applying pressure to the intraday CNS, and then we're just gonna probably see like a little bit of stagnation. Hopefully we stay above 122 going into close. This does mark a higher high for GameStop, which could indicate a reversal in trend for the short term, which is what we want moving into these FTDs. Hold AMC 100Cs overnight. My 100Cs are for January. Still some pressure left in that system. Yeah, there is. Well, we'll see more tomorrow with the ETF FTDs coming in, Gaff. Yeah, I know. I don't know if we'll hit 140. It seems like a stretch given how low we dropped. Maybe 132.50 or 136. Pushing up to 140 is kind of, that would be a big upside. They're still overextended on ETFs too. We saw that barter rate bump yesterday when they tried to get the price back under control. I think you're going to be disappointed with how that plays out, Stefan. I mean, if you're talking, think of it this way, which is more how I think these cycles go. Let me show you here on TradingView. Think of the whole cycle playing out much, much faster, right? Think of this as the like actual like move to phase E. Wait, you can't see that, right? Can you? You guys see that? No, it's not on. Think of this as the actual move to phase E, and this being distribution instead of accumulation, right? And then another shoulder here before falling to the low, and then accumulation beginning. And if you look at GME cycles over time, they all kind of follow that same distributive pattern. Like, let's go back here to like May, June. You know, if you think of this as like the spring test, right? And this the SOS, and this phase E, right? And then we see the, the distributive effects as we move down into a new Wyckoff like accumulation period. So I think because of the way GME's illiquidity, I think we just see like I think we still see Wyckoff play out, but I think it happens at a much faster rate. Whereas before, when we saw, like before January 2021, we saw it play out over these massive time frames, right? Where this is like, several years. Seems BBY wasn't allowed to run today. Thank you so much, by the way, Ryan. Some XTA? What about it? I mean, I think X looks fine. I think it's still going to recover and push up. I think we'll see, a climb in, steel over the next 6 months. How many days will we have ETF pressure for? We'll have it between, hold on, you can't see it because the oscillator. 1 second. So it begins tomorrow on the 5th and carries out through May 19th. And then I believe the overlap occurs for 4 days. So from May 5th through May 5th, 6th, 9th, 10th, 11th. 11th is the last day of overlapping FTDs between the MM and the ETFs. And then from the May 11th through the 19th, it's 8 days of ETF FTDs only. Interestingly, if we look at how that played out in the February run, from Feb 8th through like 16th, the overlapping days we saw some volatility, but it wasn't until the ETF FTDs hit here, and if you go back and like look at the DD, that was from Feb 8th through 16th. It wasn't until these hit that we really saw price improvement. Which makes sense because like MM FTDs can be kind of a mixed bag, right? Because they're generally generated by hedging. So they can be like net long, net short FTDs, which guarantees some volatility. It doesn't really guarantee any price movement. But ETF FTDs are basically entirely net short, right? And so those seem to have a stronger effect on price improvement, provided the quantity of them is great enough. And again, I mean, if you have to look at the SPY during this same period of time, because that active fund pressure has an effect as well. What might actually be interesting here is that the SPY we outperformed the SPY a lot through that period of time. The SPY from here, this is like Feb, this is the 7th from here, through the 16th. So we actually inversed active funds. So net short FTDs must have been pretty fucking long. ETFs overlap from the 5th to the 11th. May 5th to May 11th. ETF and MM. But I don't think that's going to drive a lot of price action. It could, but it's more likely to drive just volatility. Like we'll see spikes in price. So kind of think of it playing out like this over the next five or 6 days. And then a small climb from ETF FTDs. And then back down. Before June. Provided we stick to that cycle. And the beauty of this, if you think about the way they use entropy swaps to hedge these moves and just their forward swap positions, is that by having this brief up cycle in the middle, where they clear out FTDs, this also gives them the perfect opportunity to spike IV and enter entropy swaps at a point where those entropy swaps are advantageous to long volatility funds or long funds, like somebody who wants that negative gamma exposure, and so but always this spike is always significantly less than the following OPEX run up, right? And so it's almost like a trap for whoever takes the counterparty position here, because it looks really spicy at that point, right? But then they get fucked on it about 3 weeks later, 4 weeks later. And that happens over and over throughout the cycles. Yeah, I'll clip the whole meme. GME broke 125.70. Moving back into Wyckoff. So getting counterparties is more and more difficult as more potential counterparties figure out what's going on. Not necessarily, but you know, that contract needs to look advantageous as a hedge to counterparties. I mean, those counterparties want to hedge too, right? If you're short volatility, you know, you're... How do I explain this? There's also someone, you know, long volatility, right? You can't just... And so the long volatility position also wants the counter hedge. I mean, really, it's the ETF that suffers the backlash from this, and the ETF shareholders, as they fail to realize value in the net assets of the ETF holdings. Which you see really strongly in XRT, right? So if we look at XRT out here on the daily or the weekly, like look at, you know, from 2021 through now, this has a negative growth rate. Right? This is like a long-term buy and hold investment of, and it mostly contains growth stocks, right? And so like, and you go back the previous years where XRT was even more heavily abused, and we see almost no like large price variance. There's no actual benefit to holding this ETF long term. Its only growth was, you know, from, you know, here in April at the flash crash through 2021. That's the only growth it's experienced since like 2016. So, you know, if you're in a mutual fund that's partially invested in XRT, it's producing no results for its shareholders whatsoever. I mean, years and years of holding before it had any kind of, like, I mean, severely underperforming things like the SPY, right? And before 2015, it had a great growth rate. Like, you know, look at this, from 2008 to 2015, it performed fantastically. And then just nothing for years. Anyway, I thought that'd be interesting to talk about. GameStop looking to break into its... I mean, everything's just continuing to push up, I should say. I shouldn't really focus on GameStop there. It's just everything. The rate hike was expected. That's why, because it was these stocks have already been underpriced in anticipation of additional hawkishness. Right. So, you know, the market before the rate hike, the market's pricing in like a 1 point move. Right. And it comes in at 0.5, which means that value is going to come back in. During these times of like a stagnant or slightly, you know, recessed economy, you know, where we're trading kind of sideways, this is very uncertain, right? This creates a lot of, because, you know, if it's going down, people know what to do with their money. If it's going up, people know what to do with their money. But sideways is difficult, and so these Fed announcements tend to carry a lot of volatility with them, and we see a lot of value drop out of the market before the Fed makes its announcement, because the possibility of an increased hike beyond expectations is on the table. AMD headed for 99, gamma neutral. Yes, it is. Thanks, Jack. I'm not long Fubo. I used to have a position there a long time ago. BBBY end of week. I mean, we'll see after tomorrow, because tomorrow could show price improvement for BBBY as well. It looks good. The fact that it's putting a little bit of pressure on that asymmetric hedging that's occurring due to the large amount of call volume could lead to a breakout. Why is gamma neutral important? It's the point at which the hedge flips. And then, you know, you have like the put call ratio, which is kind of where the hedge gets stronger to the upside because more calls are being hedged than puts. Whereas like the put call flip point is really a different metric, right? It's not like a Greek analysis. It's just kind of where the contract volume takes effect. And gamma neutral is really where the hedge flips to the positive, which we will see today on GameStop at least. We'll see a positive NAV GAX. I don't know if we'll see that on BBBY for today. Let me double check. BBBY at... Did I copy yesterday's today? GME Delta neutral at 124.49. Don't think I see BBBYs today. I think I might have put the wrong options data in this morning's Reddit post. Did I copy the wrong? Yeah, I might have. I don't have BBBYs for today. BBY's gamma neutral yesterday was at 1621, so it's still a ways off. So some extra cash on the side since I thought the market would be heading into a downturn. Do you think it's worth getting anything for the rest of the week? Or just wait until next week? I mean, sure, you can continue to play this bounce back. It's going to lose a little bit of steam. And then, you know, some stocks will continue to surge upwards and others will kind of lag behind. Likely value stocks, as, you know, it becomes more and more clear that the Fed is going to move towards a bit of a recession. You have to calc it yourself. No one, I think no one realized, you know, when they were coming out and attacking Yelia back on Superstock before all this went down. Yeah, I don't think they realized how valuable the information she was providing was, and it's really unfortunate. I think BBBY is worth buying right now. I think it's still very cheap. You know, it's a bet that, consider it this way. It's a long-term buy and hold stock like GameStop, right? And you're betting that the company will actively work to shed its debt and realize prices nearer its book value, which are significantly in excess of its current trading price, right? So it is a value investment. It's at these prices, similar to, you know, buying into like GameStop last year or the year before last, back when GameStop had debt and had, you know, these other issues and had no real forward trajectory. So there's risk. I mean, it's not guaranteed to go up. But we do know that, you know, Cohen is pushing for that and that he has the leverage to continue to push for it if he so chooses. Did you get to play both sides of your straddle? Yep. I mean, I still have half of the long side. I bought pretty far out, so I might carry it for a few days, maybe a test of 432 on the SPY before I dump it. But I sold the put side already. I kind of highlighted the turnaround here when the volume spiked on the dip. We see this volume spike here when we saw this like big fucking doji candle. I was trying to point that out during the meeting. But yeah, like you see how the volume surges but price remains stagnant. And then we see a flip to the long side, right? And that was the last of those, mostly the last of those short positions getting out. Can you please check out Tesla for tomorrow? Probably just more up. I remember a lot of things are going to move overnight after today. So we're going to see a lot of the bullish price action, especially of these big cap blue chip companies, occur in the overnight session. Today was a good day for my paper account. Made something with AMD weeklies. Sigh, I know. GME went up and bought my first CSP on BBY. Mad respect for everything you say and do, all the way from the EU. Thanks, Code Black. I appreciate it, man. I was showing the doji as an example of the spike in price and the stagnant price movement. But the price and the volume are far more important than how the candlestick fucking represents them, Stefan. Dojis can occur on low volume, they don't mean shit. You got the wrong takeaway from it. Pretty bullish for tomorrow, yeah. I think it'll be a good Friday, which will probably lead to a decent Monday, Tuesday. Depending on options exposure in the market, which is going to be minimal because people have been pulling money back for so long. I thought Stefan wasn't allowed any more questions. Yeah, but that doesn't stop anything. Tomorrow's Thursday, whatever. Thursday, Friday, into Monday, Tuesday. It doesn't matter what days tomorrow is. The market's open, right? GameStop officially back and it's above its resistance. Just a hair, but it's back above it. Buy any more AMD calls in the near future? Probably not. I think I'm pretty well positioned. I played around with some weeklies today. It didn't turn out good. The price moved. I expected the price to move down into the Fed meeting, but not as far down as it did, and I got stopped out because of theta decay. I would say no. I mean, I have Junes at like 85 and 90. I have leaps at 90, 95, and 100. I don't think I'm gonna. And I have 110s and 115s, and 145s, which are never gonna print. But yeah, I don't think I'm interested in buying anymore. I might exercise some of the 80s, but we'll see. Do you feel safe holding AMD and V overnight? Yeah, I'd feel pretty comfortable with both. As long as I have time on the option. If it's a weekly, probably not. I would just capture profits. But if you have like a couple weeks out, or 30 DTE or 45 DTE, then yeah, I wouldn't feel super stressed. What would need to happen with GME for this is the real Wyckoff spring test thesis to be correct? We'd have to break 200. Thank you, Girk. Thank you, JPAL. Thank you, Lisa. I don't know how she does it, but Lisa Sue lays down some fucking earnings that are just unbelievable. Just tapping my feet on the floor. How would you play 100 calls at 105 on AMD expire 513? I mean, you need it to move up, don't you? I mean, you're kind of in a position where you have to hold them overnight, right? Especially if you bought pre-earnings. Fucking A. That's really pushing up. This one. Yeah, DDS at almost 340. BBBY. I was talking about BBBY. What are some good value stock that's still good value now after this FOMC run? Might still continue to run. HD, Sherwin, Cat. Yeah, I think all three of those will continue to see upside. Commodity stocks, I think we'll see upside on. Specifically, you know, metals, grain, for other compelling things are like corn and fertilizer. Both should be lifting off some like intra-month lows right now. This day needs a name. Why? People made money? We'll call it General So's Day. Imagine if I hadn't ordered and eaten General So's chicken and the market had tanked. You're welcome. So day. So's day. It works. Wind sends moon. Like 3 to 5 years, JFresh. SST is still dead even after JPow's blessing. That thing's just manipulated into the ground. I'm still holding my calls though. Wheat $9 October seem okay. Probably not terrible. It's pretty deep in the money. 10% in the money, a little more. I guess. What's wheat trading at right now? I don't know if I'd speculate on a squeeze on wheat by buying like 17% in the money calls. Like there's no extrinsic value to capture in doing that. Unless you're just going long wheat, in which case, okay. Without a squeeze, is BBBY a $70 to $100 stock in the future? I mean, they'd have to really fucking turn around their business model to hit 75 or 100 in 1 to 2 years. I could see 40 with some volatility, maybe touching 80 once or twice. Provided the interest is there, just because it is kind of a low float and a little bit illiquid. And the buyback will help it down the road. It's not helping it right now, but it could if interest picks up. It's worth that. I mean, you know, based on their assets, I mean, they could be worth more. I would say right now a fair valuation is about double its current trading price. So like 28 to 32 at most. If they're able to shed that debt, pick up revenue, split off or improve upon the Bye Bye Baby brand, move more into digital sales, then yeah, especially because they already have the fulfillment centers in place. I think their move to e-commerce could be very quick. I think they're already trying to do that with like DoorDash and stuff to some degree, like same day delivery, which is picking up in popularity. They're also offering like 20% off coupons through DoorDash, which is interesting. JPow even pumped rad. I do have X leaps. I also have shares. I have a like $31 cost basis on my shares. And then I have leaps at 32 and 35 and 40. Dutch Maverick, thank you so much for becoming a billionaire, man. I appreciate it.
Happy birthday, Gert.
Yeah, we might have a chance, but we ain't got roles. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes gherkin the go. Hoping that you read the DD, cause when the shit squeeze, we go end up with
High five to the moon. Why would BBY not react as much as other stocks to the market run? Less active fund exposure? I mean, 2 big institutions just sold out of BBBY. So, you know, it may not have as much active fund exposure putting pressure on it from the rise in the market. And then also they're really trying to keep the price down on it right now. They're working pretty hard to keep it under 15. And what that could be is here's something interesting, is the price drop in BBBY, and I'm kind of looking into this right now. I need to compile some data. But the price drop in BBBY and this sustained price at this like $14, $15 level could be the entities interested in buying Bye Bye Baby. So you know when there's like a buyout on the line, price will like shoot up overnight and lock out. And then that price will just, like Activision, right? That price will just stay there with like some arbitrage opportunity on either side. I think what we're seeing on BBBY is interest in a buyout. And so they're trying to keep the price low so they can buy it out cheap. True if big. Yeah. I say that right before market close. I'm rock solid after I hear that. I don't want you to be able to sleep on your stomach. You could suffocate in the night. I mean, it depends on how much the price runs. I mean, if BBBY at this point, I think goes over like $35 near before they've cleared their debt, I'd probably be okay with selling my position and then trying to buy back in at a cheaper price. So my options would like in 6x at that point, 7x. BBY 20C Jan 23, same like AMD 100Cs, same like free. Maybe. You were right. Rip today, rip tomorrow. We'll see. Ding ding. Yeah, what a great day. So, you know, Fed expectations came in, got rid of some of the uncertainty in the market. You know, GameStop getting a little bit of pressure on its CNS and giving us a nice little push to the upside. We did stay pretty channel locked through the early part of the day, which is as I expected. We saw the early morning CNS spike. I mean, just go look at the daily DD. I pretty much outlined exactly what would happen here. And then, you know, this isn't, nope, wrong stock. Same thing. So early morning CNS spike covering Fed meeting, and then, you know, going up. I think we'll see continued price improvement tomorrow, or at least volatility for like the next 4 days moving out on GME. Probably out through, I want to say the 11th. Yeah, it's the 11th. So this period of time from here to the 11th, we should see at least, I think, trading in this range 130 to 126.70. And then I think maybe after that we could see a breakout on those ETF FTDs. I think the market maker FTDs will actually kind of stabilize price action and prevent us from going higher. If we do get enough external pressure from active funds due to the SPY coming up, so say the SPY moves up to like the 440 range, that will push us up. So instead of, you know, that chop, we'll see improvement over the next 5 days. And then if that's the case, when those ETF FTDs come in, we could see a higher test. maybe even like 158.50. But we'll have to see how that plays out over the next 5 days, and then we'll figure out what's gonna kind of happen after that. But a good day overall, up $6, 5%. Our NAV GEX is now flipped positive, so we have a positive delta hedge. We will have some call hedging due to today's price improvement, overlapped on tomorrow's now compounded FTDs, plus whatever improvement we see in the market tomorrow as well. So, I mean, the recipe for a move to the upside is in place. I hope you guys had a chance to pull back some covered calls earlier today when I was talking about it. If not, think about de-risking some of those positions over the next few days if we trade sideways, because an unexpected move up could happen. Don't forget you said you'd read us Goodnight Moon. All right, 1 second. In a great green room, there was a telephone and a red balloon, and a picture of a cow jumping over the moon. And there were 3 little bears sitting on chairs, and 2 little kittens, and a pair of mittens, and a little toy house, and a young mouse, and a comb and a brush, and a bowl full of mush, and a quiet old lady whispering hush. Good night, room. Good night, moon. Good night, cow jumping over the moon. Good night, light and the red balloon. Good night, bears, and good night, chairs. Good night, kittens. Good night, mittens. Good night, clocks, and good night, socks. Good night, little house, and good night, mouse. Good night, comb, and good night, brush. Good night, nobody. Good night, mush. And good night to the old lady, whispering hush. Good night, stars. Good night, air. Good night, noises. Everywhere.
You how to do this stuff. You all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Sit, Krian, sit. Good dog.
Hydrate! Hydrate! Did you get any of that? It's a good show!
Not an advisor. Frigulon.